You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 3rd day of August, 2015. Hope you had a great July. Hope you had a great weekend. Hope you had a chance to spend some quality time with your family. And I'm so glad you're here with us today. If you're returning, welcome back. We are now in our 2nd decade of broadcast history. And if you're here for the very first time today, well then let us roll out the digital red carpet and make this a very special experience for you. You should be able to see the chart I have up. It's the S&P 500 E-mini Futures. If by chance you just hear the audio stream and you don't see the charts, and you're not driving, and you're not operating heavy machinery, then go to our homepage at cfrn.net. on the right-hand side of the page. Right-hand side of the page. Click the big microphone, follow the instructions, okay? And you'll be registered through the end of the month. 30 seconds for 30 days almost, because today's the 3rd, not the 1st. What that means is by registering today, you're going to get an email, a little reminder email each day right before the show starts. It says, reminder, radio show starts at 12 noon Eastern. And when you're ready to join the show, you just click the link. You don't have to go through the registration process every single day. Now that link you got today, it's going to be the same link for the whole month. So you misplace it, or I'm sorry, don't misplace it, okay? Because sometimes Citrix, who we pay to send out the reminder email, well, Comcast spam filters or AOL spam filters or even Cox's spam filters can sometimes get triggered by the regularity of those emails, and they block it as spam. Although they're all big boys in big business together, and they know that none of them are sending out spam, but it's just button heads. And it's all done for your protection, right? So there's a couple of options. You can take today's link, tuck it away so that you have it every day, or you can grab a free Gmail account, 100% free. This unlocks all kinds of services across the internet. You get cloud storage space, you get spreadsheets in the sky. I mean, you get access to our Google Plus page, not just to view it, but to post, share your opinion, comment, etc. All right? Now, that's 100% free, and you might say, well, I don't really need another email address. Okay, well, you can get one, and it's free. And again, it gives you a lot of added value, a lot of added benefits, added services. So take advantage of that. 2 ways to make sure you never miss another radio show. Also, you can subscribe to this radio broadcast via iTunes. Now, iTunes has had podcasts since 2005. Maybe you didn't know that. Guess how long CFRN has had a podcast on iTunes? You guessed, since 2005. We were one of the early pioneers. We really were. No one knew what the direction was going to be, becoming ever more popular. We did something unique all along the way in that we took a live daily radio broadcast and then converted it into a podcast for those who were unable to make it to the live show. And so if you go to iTunes, or if you go to the podcast app on your iPhone or your Android phone, open it up and search the word Emini, just like it sounds, Emini. We pop right to the top. You can subscribe to the show. Doesn't cost you a dime. What it does guarantee is that you'll never miss another program. In fact, when you're standing in line, you're at the doctor's office, the DMV, wherever you find yourself on any given day, patiently waiting for something or something, for somebody or something, then pop your earbuds in and away you go. Enjoy the show. You'll be able to not only hear the audio as an audio podcast, but we now do, for about 9 years it was just audio. In the past year we've added video. So the cool kids call that a vodcast, right? Video podcast. Now, if you're driving or operating heavy machinery, just listen to the sound. Don't try to look at the charts. When Michael's doing a recap of the live trading room, it's not a good idea to be changing lanes and looking at the screen, okay? Just don't do it. For those of you who don't know, you can join the broadcast live using a free app on your iPhone or your Android phone. It's called GoToWebinar. We broadcast the live show Couple different ways. We're on YouTube Live, we're on GoToWebinar, and of course we're on our own native radio stream. Many ways to enjoy the show. Also, a great radio app out there turns your cell phone into a global radio, live radio. It's called TuneIn Radio. And thanks to Keith, tip of the hat, for years ago bringing TuneIn Radio to our attention, and we have been there broadcasting live for quite a number of years. We're in our second decade of broadcast. We've been on TuneIn Radio probably for the past 5-6 years, I'm going to guess. A new feature is that you can stream the audio directly from our homepage on your smartphone, on your tablet, or your desktop, of course. You don't have to use an app. You can just stream it straight off the homepage. So much to share, so much to talk about. We've got our Managed Futures program that's kicking off this week. That has kept me so busy over the weekend. If you've emailed me and I've not gotten back to you, my apology. Email me again, please. Okay? Now, let's go take a look at today's numbers. In the U.S., the Dow is down 74 points. Cash markets. S&P is down 2. NASDAQ is down. I take that back. The NASDAQ is actually up 3 3/4. The Russell 2000 down 4 1/4. Crude oil is down almost 3%, down $1.28. Gold down $4.30. Asian markets, not good. The Nikkei is down 37. The Shanghai is down 40. The Hang Seng is down 224. And in European markets, the DAX up 134. The FTSE down 7. The CAC 40 down 37. Okay, so those are the numbers. Now, today's show will be a little bit different. You may have noticed there's not a lot of volatility in the markets today. This was the Globex Open last night. Swing high of the session was 2102.5. Swing low of the session 2089.50. And where do we sit as we open this radio show? How many times have I said this? I don't know. I need one of those guys standing here with one of those little things that goes tick, click, click, click. Anyway, we are inside of a weekly trading zone from last week. Okay, last week's weekly trading zones. We don't make public the weekly trading zones till about Wednesday, some weeks Thursday. But here we are again with that carryover effect I always talk about, opening the show inside of a weekly trading zone. Now, our CFRN partners and clients, they receive the weekly trading zones for this week every Monday morning at 6:15 a.m. Eastern. If you don't have your zones and your link to the trading room and your password by 6:30 a.m. Eastern, something is amiss. Please email me straight away, support@cfrn.net, and we'll get that taken care of. Now, due to the low volatility, we didn't have a lot of trade opportunities this morning in the live trading room. So Michael is still going to come on. He's still going to do a recap of everything that happened in the live trading room. And this will be a great opportunity for you to see how robust our trading methodology is. On a slow day with low volatility, I won't steal his thunder, but Michael will soon tell you how long it took for us to hit our daily goal and how many trades it took. Also, when markets are quiet, it's very easy for a trader to get chopped up a little bit. Okay, markets get choppy and you get chopped up, and pretty soon you're trying to go long and you're stopped out. Oh, I need to be short. We have one of our indicators that does a beautiful job of keeping you out of trades that have very little chance of being a high probability trade. All the other indications are there. All the other indicators are aligned. The stars are aligned, if you will. But the little step line says, keeps us out of the trade, saves our bacon again and again and again. Michael will show you that as well. Okay, then what we're going to do is he's going to pop back in after, or I'll pop back on after the live trading room recap. We'll talk for a moment about the managed futures service that's now available. He'll give you the address. You can go, you can sign up for the newsletter, you can learn more about what exactly we're doing, how it's going to work. It's built off the back of our Concierge Trade Alerts, which, by the way, have a 4-year track record. Now, we were in public beta for 3.5 years. We published the trade alerts themselves on Twitter, on Seeking Alpha, on StockTwits, and on Google+. Those trades stand today as a matter of public record, as a public testament to just how well the Concierge Trade Alerts perform. Are they the Holy Grail? Well, no. Do you still get stopped out? Of course you do. This is the real world that we're talking about, okay? This is the truth about trading. So Michael's going to talk to you after he does the recap. I'll pop back in. I'll attempt to show you a few charts that represent some of the Concierge Trade Alerts from the past week or two. I was going to send him over the screenshots, but I thought, you know what, I'll let him talk. I'll show you some screenshots. It'll probably be simpler that way. Bert and I normally do a technical analysis Q&A session every Monday at 3 p.m. Eastern. I'm going to postpone that until Tuesday this week. Hopefully that will work with Bert's schedule, 3 p.m. Eastern. We were going to do just a basic Q&A session, but I thought I would allow you guys to maybe submit, and you can do it right here via the chat box today. If there's something, if there's one particular thing about the CFRN E-mini method that you'd like, you know, to understand better, whatever it is, go ahead, submit it, put it in the chat box. Remember, the only people who see what you type anyway are myself, Michael, and Bert. Bert and I will sift through the answers or the ideas that you give us, and then we'll schedule a full-blown technical analysis class tomorrow afternoon, which will come right after Michael's class that he's going to have tomorrow afternoon, and he'll tell you more about that in just a moment. Once we're done talking about the Concierge Trade Alerts, the Managed Futures Service, the Trading Room recap, once all that's done, then here's what's going to happen. We'll go to our good word for the day. We'll then go talk with David from pagetrader.com and get his forecast from the Edge. And then joining me at 1:30 p.m. Eastern, my brand new co-host, Mr. Garrett Jones. He was with me last Monday, and he's going to be with me every Monday going forward from 1:30 to 2:30 p.m. Eastern. I'm very excited. He has a great history, great knowledge of the markets. You're going to enjoy him. If you were here last Monday, you enjoyed him. If you missed him last Monday, you can, of course, go to our archives. You can listen to last Monday's show. If you don't know how to get to our YouTube site, it's youtube.com/CFRN. I'll put the link into the Google Plus page, or I'll show you later in the show today. And so that's how it's going to work. Michael's coming right now with a recap of every trade from the live trading room today. Then we're going to talk about the managed futures service based off the Concierge Trade Alerts. Then we're going to go to our good word for the day. Then we're going to go talk to David for forecasts from the Edge. And then we're going to go talk to our new co-host, Garrett Jones, about whatever he wants to talk about. All right? So we've got a full show lined up. Strap in and let's go. Michael, ready?
Ready.
Take her away.
All right. Put this over here. Do this and this. All right. So you should be looking at our web page.
I can see your web page. Our web page.
There we go. Here we go. I'm going to hit record.
All right, and I'll hit mute.
All right. Good afternoon, everybody. Happy August. Today is August 3rd, 2015. Let's see. If you have not taken a free trial with us, go to CFRN.net. In the right-hand column where it says name, put in your name. Where it says email, put in your email. Click register for a free trial. When you do that, you'll be sent the confirmation link. You must click on the confirmation link. Okay, you must click the confirmation link. If you don't click the confirmation link, there will not be a free trial. Because we don't know. All right, we don't know that you did it until you click that confirmation link. Let's see. Our spreadsheet. To get to our spreadsheet, it is now publicly available all the time. Just go here to view live trading room results, click on that, view our daily results spreadsheet from today back to January 2nd of 2013. Just click there. That will bring up this wonderful spreadsheet. All right. The spreadsheet, here it is. We finished up last month with $6,365 per contract. That's gross over 21 days, averaging $303 a day. Today we made 18 ticks in the Russell. We lost 14 in crude oil. We made 7 in the euro. It was a slow day today. We only had 12 trades overall. This morning, though, it took us 7 minutes. It only took us 7 minutes and 4 trades to get to our goal for the day. One of those trades was a loss on crude. That's why it took us just a couple more trades than normal. We were at $122.50 a contract at that point. You can see we placed another 8 trades and made $3, or $5. But that was because we lost another crude trade. Yeah, so that was that. So on the month so far, we're up $127.50. And on the year, we're up $34,535. That's over 141 trading days. Averages out to $244 a day. Okay, $244 per day. Yeah, that's it. That's it. All right. I don't have a lot of trades to go over today because, well, there just weren't a lot. But you know, we'll go over this. We'll go over this shortly. MFS International website. Okay. Oops, didn't mean to do that. We'll go over that shortly. Let's go back here. This one. So let's see the trades. Okay, we're going to start out with the ES. The ES went down to a weekly trading zone today and bounced out of it. I only showed a couple of trades today on the ES. There was one long trade over here that would have stopped you out, I believe. 97 down to, yeah, definitely would have stopped you out. And there was a short trade in here that worked out well, going right down into the zone, and a long trade from over here that worked out pretty well. Okay. Frank, I cannot answer my phone right now. And that was that. All right. That was it on the ES. Now on the gold, what time is it? 12:26. On the gold, we did not take a single trade today, looks like. And, you know, we were looking for it to set up, but then we wanted to see it start trending. It finally started trending here, but then it went right back up. Looks like there was a momentum long trade right here, but it was going into dynamic resistance, so we skipped that. Then right here, the black step line was on the BBC, so we skipped that. Let's see. You took 5 minutes this weekend, did a calculation of my trades for the whole month of July to reach my recommended goal of 100. It only took an average of 19 minutes with the longest time for the month being 94 minutes, and 4 minutes being the shortest. And you know, a lot of times, John, when I say 4 minutes, it's because I might have been 2 minutes late, and it might have been my first trade. The actual trade itself might have taken about 30 seconds. Anyway, right here was a short trade, but this was we were wrapping up. There was a shorting opportunity here. That I'd call that during the break right there. A short trade there, and a follow-up short trade right over here during the break on the gold. All right, that's about it. That's about it on the gold. On the Russell, let's see. On the Russell, we had this short right here on the Russell. Okay, our first trade of the day was right here on the Russell. We made 10 ticks profit on that one. We missed the second one, and we had 4 ticks profit on this one, putting us at plus 14 on the Russell. Okay, then it changed directions here and started moving up. There was a long trade right here that I totally missed on the Russell. Right there. Oh, I ended up missing that. And there was another one over here that I missed. All these trades that I keep telling you I missed, it's because I was in some other trade or doing something else at the time. I think right in here I was talking about the managed futures service. I think that's why I ended up missing those trades. Okay, then I got into a weekly trading zone. Got into a weekly trading zone here, and I took a short trade over here. Got 4 ticks profit on that. Put me at plus 18. Then a break-even trade here. And then I missed a couple of trades in here. Okay, I missed a couple of trades in there, and let's see. Another break-even trade over here, and nothing there. Well, I missed the trade there. It was a bounce off the BBC. It's a bounce off the BBC. And let's see what next was there. There was, I'm sorry, got distracted. Little feline. There was a short trade right here, a momentum short trade during the break. Okay, and another one right here. That would be right with slingshot short trade on that one though. Okay, and that was it for the Russell. Okay, crude oil is starting to move right now. Look at this nice trend right here. Nice trend. Crude though, we had 2 losing trades in crude. Our first trade of the morning was right here. We stopped out minus 8 ticks. Missed a trade over here. Missed a trade there. Took a break even there. Missed one there. Stopped out again, minus 8 ticks. At that point, we're at minus 16. Missed a trade there, and got 2 ticks profit on this one, putting us back to minus 14. Okay. And during the break, there was a shorting opportunity here, and here, and here. And I guess right there too. It was a momentum trade right in there. Another one right over here. Okay, and another one right there. And that was it. That was it for crude. We ended with minus 14 ticks on crude. Crude is really moving right now. It's a great market to be trading right now. The soybeans, let's see. Yeah, we didn't get any trades on the beans. We had 1 trade here, 1 here, and 1 here. We missed them all. Okay. The beans were okay on the day. And the euro, we had 2 trades on the euro. This one here where we took 7 ticks profit. And this one where we had a break even. I had started drawing the trend lines in here, but the trades never set up completely. This right here would have been a momentum short trade, but I wouldn't have taken it because of dynamic resistance, or dynamic support right there. Okay. Yeah. They wait until I'm done trading, and then they make it easy. This is a short trade over here on the gold right now. All right, so let me bring up my spreadsheet. Here is the spreadsheet for today. We were plus 18 on the Russell, minus 14 on crude, plus 7 on the euro. All right. On the month, we're now one trading day in, $127.50. On the year, $34,535. Okay, that's where we stand with all that. Thank you, John. And if you have not taken our free trial, just go to our homepage at CFRN.net. In here, put in your name, then put in your email, then click register for a free trial. Okay, click register for a free trial, and you'll be sent all the information you need to take the free trial once you click the confirmation link that is sent to you. All right. All right. And that's it, guys. From there, I am going to stop my recording right here. Okay. And Dwayne, oh, you're already recording. You want to go into the Managed Futures?
Yes, sir. I think that would be appropriate at this point.
Okay. David, it's one contract. All right.
Okay.
So,
tell you what. Tell you what I'm going to do. Let me grab the charts, I guess.
okay.
And all right. Now, I didn't have a chance because it's been so busy this morning with the phone keeps going on. I mean, the thing, the app, new visitor, new visitor, new visitor. And I'm trying to answer emails and text messages. And guys, I can't take phone calls during the live show. I apologize. I you know, well, you understand. So, anyway, let me give you just a glimpse of what's going on right now.
Okay. You want to take the charts?
Yeah, let me do that right now.
Okay.
Okay. Can you see them now?
Yes.
All right. Did you show the good folks this yet?
I put it up, but I didn't talk about it.
Okay. ManagedFuturesService.com. Now, most of you guys are familiar with the Concierge Trade Alerts. If you've been around this radio program for any length of time, you've seen me break this old boy out every day and say, okay, this is what we sent out to our partners and our subscribers last night. Okay, there's a long and a short on each market. We send out 8 markets, so that's 16 potential trades. However, what we found is that most trades tend to trigger more than once. Why? Because, as we've said for over 4 years now, important prices and important areas are almost always tested. We see that happen again and again and again. Okay? So, what we have put together for you is a way for you to benefit from the Concierge Trade Alerts without having to sit in front of the screen all day. That can be tedious. What if you could have the benefit and the power of the Concierge Trade Alerts, which again have a 4-year public track record behind them? Now, this is just, you can go out on Twitter today, twitter.com/CFRN. You can go back 3 years, 3.5 years, and you'll see that night after night after night, I sent out the tweets, and then the next day on the show, we would highlight them, talk about them, and so forth. I kept telling everyone, guys, we won't be able to give these away for free forever. We're doing the beta test. We want to deliver the best product possible, and so we kept working on it and fine-tuning it and fine-tuning it. It rolled out from the tweets to the Concierge Trade Alerts back. How long has it been now, Michael? A year?
Yeah, roughly a year.
What a year it's been, I got to tell you. Now, let me just show you what's happening so far today with crude oil. Okay, last night we said to our subscribers on crude oil, we said consider GCLU5, consider being short below 46.60. Now, 46.60 right here. That right there was $1,000 per contract. Okay. Now, when we hit 44.60, if price goes to 44.60, that's $2,000 per contract. Right there. Okay. Now, ask yourself this. Do you have the nerves, the steel, the stones, the whatever it takes to hold on to that trade? You're well over $1,000 in profit on the trade. Do you ride it out? Do you trail it? Do you let it go? What do you do? You know, that's a good question, right? Well, one answer is, as you are learning to trade and you are trading your own account, you can also diversify, is one way of putting it, and you can also hedge your account by putting part of the money in the hands of a professional. I think is that a good way to say that, Michael?
Yes.
Why don't you do the talking? Let me do some pictures here. Let me show a couple things. Why don't you talk about the Managed Futures Service.com website and the whole, just the whole thing. For folks that have never heard a word, this is like, what? What are they talking about? Tell them.
Okay.
Tell them if you will.
I will do that.
All right.
All right. Do you want me to take the charts back for a minute? Or
if
you just put up the website. I can just talk about the website.
Okay. I mean, I can, yeah, whatever you want me to do. I just thought it would be easier for me to try to show charts from this end because you don't normally have things set up on hourly. But anyway, go ahead.
Yeah, I don't. I know. I just wanted to show everyone ManageFuturesService.com. That is the website where you go sign up for the Managed Futures Service. Okay, you can just hit that register right there. See that? Put in your name, first name, last name, email, phone, and once you do that, it takes you to the next step where you would actually choose how many contracts you want to trade. Okay, now you can put it down, Dwayne, and I'll show them.
Do you want me to take them to the second page?
Well,
no?
You can't. Nah, that's okay. They'll figure that out. It's really intuitive.
Okay.
I want to short sell our audience. I think they're an intelligent bunch. They'll figure it out.
Okay.
What it is, guys, is you choose how many contracts you want to have traded for you. Now, you have to have $5,000 per contract traded in the account. All right, so if you want to have one contract traded for you, you say you want one contract traded, and you pay $100 per month to us for that one contract. Now, that contract will be traded based upon the concierge alert levels. Like, let's say it was the 30-year bonds right here, and you paid for one contract to be traded for you. You have to choose which market you want that contract traded in, whether you want it to be the bonds, the ES, the YM, NQ, soybeans, the euro. You have to choose what market you want that contract traded in. Okay, so those of you guys who have signed up already, who have paid a fee to us already, you need to tell Tim at BTR Trading what market you want that in. And I'd appreciate it if you let us know too, so then I can keep track of that for all of us. I can keep track of all that information. Okay. Now, it's really a pretty simple thing right here. The alert last night was 156.24. So if you had said you wanted one contract of bonds traded, then you would have been popped in at 156.25. Okay. And roughly 156.25. There's going to be some slippages as these numbers get larger and larger. The number of people that are doing this. So you would have been popped in. Let's just say 156.25, and depending on the volatility of the markets, the stops are not going to be 8-tick stops like we normally have, for our alerts. They've done a whole bunch of work and optimization, and they've come up with their own formula based on some different volatility measurements on how they're going to manage your trade. Okay, but ideally, they would put the trade on at the alert level, and then they would manage the trade for you based on their results. We should have some performance information probably tomorrow that we should be able to put a link to on the website. Okay, we should be able to get that information for you probably tomorrow. But as it stands right now, you can hang on. I want to just get the information here. Yeah, this is the contact info. Okay, for those of you.
Okay, I've got the charts. You want me to give you the charts real quick?
No, that's okay. I'm going to paste it in here.
You're going to paste it in? Okay.
Yep. That is the contact info for anyone who wants to do this. That's the contact info. Now, we're working together with them so that they will know how many contracts can be placed for you. Okay, how many, and of course that you're gonna have to work that out. If you are already receiving the alerts and paying for them, then you don't. Well, then you have up to 5 contracts before you have to start paying. Okay, like I know we just got a payment from one of the partners who paid the annual fee. It just came through. Who paid the annual fee, and he just signed up for 2 contracts as well. So I'm gonna have to refund that couple $100 to him, because he's already getting up to 5 contracts. All right. Is performance info based on actual trades? It's both, John. It's going to be based on back test. I believe it's going to be based on back testing and forward testing trades. Okay. So
and real time.
Yep. There's going to be some of it in there. If you want to trade 2 different markets with 1 contract each, yes,
it will. Let me just. I'm sure you'll say this, but let me just throw in. I don't mean to interrupt, but this will comply with all NAFTA regulations.
Yeah. Yeah.
And then some.
One of the partners at the place that's going to be executing the trades is actually he's on the board of the NFA. So everything is going to.
Did I say NAFTA? That's a little different. That's a little different trade agreement.
Yeah. Yeah. The NFA.
Yeah. There you go.
Yeah, Trevor. The question Trevor just asked: if I want to trade 2 different markets with 1 contract each, do I request 2 contracts or make 2 different orders for 1 contract each? You would just request 2 contracts, Trevor. Okay, and then I've made a thing for them. As soon as you request it and the payment goes through, then I've made a thing for them to look at so that they can see how many contracts you're eligible to have traded for you. Okay, and that's updated in real time. Well, as close to real time as I can make it. Okay. Yeah, and that's it. That's how the whole thing works. You see all these things that Dwayne's showing you right here, crude oil last night. Now the alert was at 46.60, and you can see that there was some pullback on that bar there. That first red bar is where it would have triggered in. The first red bar is where it would have triggered in. There was some pullback on it. Looks like probably $150 maybe. But then it dropped all the way down to where it is now.
I mean, so far it's been worth about $1,500 a contract if you were in it. Okay.
And
now,
these guys, you're going to be getting much bigger targets. Your risk is going to be as much as $300 a contract, maybe more. But you're putting it in the hands of a professional trader. All right, so they're going to trade it according to the results that they have. They're not going to be putting on an 8-tick bracket or anything like that. Okay, they'll be putting on stops based upon volatility of the market. Right, so you have to understand that going in. All right, you don't have to do anything. We're not going to be sending you daily updates and all that kind of stuff. We're not going to be sending you daily updates and all that kind of stuff. You will be getting a statement whenever a trade is placed in your account. You'll get a statement, okay, from the brokerage itself.
Via email.
Via email. You know, we do not know how much money you have in your account or what you've done in your account. We don't know any of that stuff. We don't have access to that there or at Daniels Trading. Okay.
So Crude, this is what happened Thursday. Here's Friday. Friday we had a nice drop, and then that thing. Oh, that thing. And then our drop, right? And then today, 46.60 down to 45.60. That's 1,000 per contract. At the swing low, about 1,500 per contract so far in that one. So we've looked at bonds. Okay, here was bonds going back to, on Wednesday we had a short. Thursday, the alert was to be long above 153.29. Now where I drew the line at 154.29, that represents $1,000 per contract. Past performance is no guarantee of future results. It's not a promise, not even a hint. Okay, I'm just showing you what happened last Thursday, just like I've been showing you on this radio program, what happened with the Concierge Trade Alerts the night before. Been showing you every day for 4 years. Okay, this is just the growth pattern. It went from the tweets to the Concierge Trade Alerts, now to the managed futures service. Okay, and so on Friday the first run was 18 ticks. Now at 31.25 per tick. Now nobody gets out at the top or the bottom except the magician, and we're not magicians. 31.25 times 18 equals, it's 562.50 if you got out right at the tippy top, but you can't do that. Then it came back, reset, triggered, and put another 14 ticks on the board. Today, it triggered 156.24. That was the alert we sent out. Every one of our partners, every one of our clients, everyone who receives the alerts, because you've paid to receive the alerts, you had this trade in your inbox last night, okay? This isn't some cherry-picked thing from 2 months ago. Okay, this is right now, live in real time. You're approaching $1,000 per contract in this trade if you are in this trade, okay? All right, so there's 3 days, 1, 2, 3, there's 4 days in bonds, and here's there's 1 day in crude, there's 2 days, there's 3 days in crude. Let's see, did I do the beans? I did the beans today, soybeans today. We said to consider being short. Let's see, 934. 934. Okay. Now, that's what I was asking about this morning, Michael. 934. And then we dropped down to a swing low at 926.25. And between the two of us, we figured that out. That was 7 3/4 points.
Yeah, something like that. Actually, 6 3/4 is what Jim said.
Okay, Jim. We'll go with your numbers. Fair enough. Now, if I go back to Thursday on the beans, let's see. Soybean short. Short below 950. Okay. So 950. Where's 950? See, these deeper stops will hold you into some of these trades so that you're then able to catch this where we drop to 38. That's a 12-cent move. Okay, 12 cents times 50 cents per cent. Okay, and so then today now again we get above. Now what are we doing? Are we dropping below 934 again? Looks that way. Now, there's a long side and a short side on each trade. Why is that? I've gone over this many times, but let me explain it one more time. It's not that we don't have a bias or an opinion. All traders do. You can't, if you've been around trading any length of time, you can't help but look at a chart and go, oh boy, we're definitely going down from here, or boy, we're definitely going up from here. However, most of us have been wrong once or twice based upon our bias. So we purposely, intentionally take our bias, our opinion, fold it up carefully, put it in our back pocket when we sit down to do our work. We do not want to send you alerts that are based on a bias or an opinion. If you only trade soybeans, or you only trade crude, or you only trade bonds, okay? And let's say that my best opinion was that, man, bonds are oversold, they're due to tank, they're going lower. So I sent you a short trade, okay? Perhaps I didn't serve you well, and I always want to serve you well. So when you see that price, and I've explained this now almost daily for 4 years, when you see long above or short below, okay, that's so that, and I don't tip my hand. I'll switch them up sometimes. I don't tip my hand where my opinion lies or my bias lies, because that would defeat the purpose. What I want is for you to be as neutral as I am and not let your trade entry be dictated by what you think is going to happen, but I want your trade entry dictated by what really does happen, okay? And this thing just did the deal. Okay, the YM, did that thing ever move today? Let's see, last night we had an alert on the YM, and it said to consider being short below 17,540. So the answer is yes. Michael, is any of that stuff flashing over in the chat box for me, or is that for everyone else in general?
Oh, that's for everyone else. That was for everyone else. It's just the contact info.
Okay. Okay, so 17,540, that was the trigger last night, sent out. 17,540. Okay. Swing low so far is 17,430. We'll call it 100 points. That's $500 per contract. Okay. Now, is there any part of that that maybe it doesn't come through that we haven't made clear? Please, we just have a little bit of time left. I want to make sure you have a firm grasp on this. I mean, we've been doing it every day forever. Last night, the Russell, we said to consider being short below 1233. Okay, 1233. Is that right? 1233. Yeah. Okay. My line may not be perfectly straight, guys, but the alert says 1233. Check your inbox. It's there. We've dropped to 1221.20. How many ticks is that, Michael?
To 1221.20.
From 1233 down to 21.20.
I don't know, a whole bunch. It's 100 and something ticks.
Yes.
I'm the math guy.
Yes, you want us trading your money. That's right. Okay. We're not going to be trading it, so you're safe.
No,
how many?
I have to write that down.
Let's round. Let's use the rounding. 33 minus 21.
Well, that's 12.
Well, that's 12. Okay. At $100 a point, that's $1,200. That's another $1,000 per contract trade. Okay? Okay. Gold, I don't know if gold did anything worth talking about. Short below 1090. Looks like we got down to a swing low of 88.5. Okay. So that's, I guess, worth talking about, right? What's that, 250 bucks a contract?
You keep asking me. I didn't get the numbers. I'm going through all the text messages.
I'm not messing with you on purpose.
Questions.
All right, guys. If you have any other questions, we'll catch up on them.
Okay.
Whatever
I'll
happened.
pay attention this time. Go ahead.
Okay. All right. The S&P. Everybody always loves the S&P. I don't think we triggered on the S&P. No, we haven't yet. Or have we? Or did we just? Yeah, we triggered at 2083 on the S&P because we wanted to get away from all this congestion. Okay. You see that? We've dropped zone to zone from last week. All right. And so I'm getting you short on the other side of this zone. I needed to get through this area. Okay. All right. I've got to go to our good word for the day. Send any questions you have to support@cfrn.net. Michael, anything you want to add?
Yeah, before you jump off there, I just want to say, anybody who's currently getting the alerts who's grandfathered in, you will not be grandfathered into the managed trading program. There is no grandfathered in for the managed trading program. If you're getting the alerts because you were grandfathered in, that's for you to trade them on your own. But if you want to have them traded for you, then you need to go to the Managed Futures Services website and sign up for however many contracts you want traded for you. Okay? Just wanted to make that clear. Everybody that wants to have this done for them has to pay $100 per contract traded per month from that website. Okay? What hours do they trade? They start putting the trades on as soon as they get them. But the thing is, it's not going to be like they're only going to trade once per alert. Okay, so like in the S&P right here, it just triggered. They would have put that trade on. $5,000 per contract, David. Okay, and the risk will be as high as $300, and maybe even a little higher. You know, it's a managed thing. They're going to manage it. We're not managing it, but they have told me that with higher risk, you know, bigger stops, they were able to lock in much bigger gains. You'll have to talk to them, Paul, about the commission costs, but you know, it's going to be placed in one trade a day, so it's pretty much negligible.
Okay, Michael, are you going to wade through all these emails and messages and all that kind of stuff?
That's what I'm doing right now. I'm going through. Yeah.
Okay, because here's what we're going to do, guys. Because our time with David is limited, so I'm going to jump to him right now so that I won't be late for that date. When we're done with Forecast from the Edge, from that portion of our programming today, we will hit our good word for the day, and then Garrett will be with us, and he'll be with us from about 1:40. He's supposed to be with us at 1:30. Garrett, please bear with me for 5-10 minutes. I'm sure you'll enjoy the good word for the day as well. And then you'll be on with me 1:40 until 2:30, okay? That's the schedule. That's the way we're going to roll daily, guys. Now, on Tuesdays, my good buddy Jonathan will be co-hosting with me from 1:30 to 2:30. On Wednesday, our very own White Bar Jim will be with us from 1:30 until 2:30. Thursdays, our every other Thursday friend, Ed Couri, will be with us. And there's a chance an old co-host might be returning to fill in that every other Thursday slot. We'll see. Friday right now, I'm reserving for somebody really special. We just haven't put that all together yet, so stay tuned. We're going to pause. Anything else, Michael, you need to add?
No, I'm typing in answers to everything. $5,000 per instrument. Best one to trade. Well, wait till we get the results out, okay? Once the results get posted on the website, then you'll be able to make your own decision, okay?
Absolutely. Okay, there's going to be forms to fill out, guys. There's compliance. There's all these things that have to be dealt with. That's just life. But the good news is what used to take 3 weeks or even 3 months, most firms have it nailed down to about 3 days now. So that's a real blessing. The turnaround time could be even quicker. Talk to Tim. He'll let you know. Okay? Guys, we're going to pause for a brief station identification. We'll be right back with David from pagetrader.com and forecasts from the edge.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you for today.
Good morning, Dwayne.
Hey, David. Good morning. Welcome to the show.
Well, thank you very much. Hope everyone had a great weekend.
Well, I got to tell you, I did. It was a hot one. My daughter's birthday, so we had a good time. We did a couple little activities, but probably the sweetest part of all was coming back inside where it was air conditioned. Poor little thing, she's very fair-skinned. I think there's some Irish in her heritage, and we bought her a swimming pool. Someday we're going to put in the big in-ground with the waterfall, but just for now, for an 8-year-old, this above-ground pool. It's a pretty decent above-ground pool, by the way, and it's no small feat to put up. Oh, my goodness, you'd think I bought her the Pacific Ocean. I mean, she just tickled pink, and I mean pink, pun intended. Real, more than pink. Let's call it red. I mean, we were careful with the sunscreen, and you can only stay out just a few minutes and come back in, and she still managed to get a little burn. No blisters or anything like that, so very careful, very cautious. You gotta be, man. That sun, wow.
Well, I have a saying for me which is that you get all the sun you need, trying your best to avoid it. So.
Right. Yep, duck when you pass the window. All right. So did you do anything special this weekend?
Well, nothing super special. No, just some normal stuff. Of course, we're always looking at the markets, not on Saturday so much, but on Sunday we all do, and checking out what the possibilities are for this week, and where are the high probability trades, what's the stuff we want to avoid, all that stuff. Other than that, though, outside of the markets, no, just some people I know are having car problems, which are not that unusual because the heat picks up and whatever weak point there is in their car starts to, I have a stepson who his car is giving him some problems. I have another friend, a woman whose car is in the shop right now, and it's just the heat puts a lot of strain on your car. And it's for people who have cars that if you did the whole buy the car thing where you had 5 years worth of payments. At the end of that period, you think, this is pretty great. I don't have a payment anymore. This is why if you buy a car, it really pays to maintain it well. Keep it clean, maintain it well, keep your underhood clean, all that other stuff, because you can do another 5 years after your payments and still only have an occasional problem and really get ahead of your original payments. If your original payment, pick a number, I don't know what car payments would be, but let's just say if you had a $500 car payment for whatever, and you kept the car for 5 years, if you keep it for another 5 years, aside from maintenance and typical stuff, if you maintain it well, you effectively cut your car payment in half because you had the car for 10 years. So you can say that, it cost you $250 a month instead of $500 because you got that extra 5 years out of it. So if you're going to keep a car, it pays to keep it maintained throughout the whole time, and you take care of it, it'll take care of you. An old friend used to tell me that, it's true. So these are mechanical things. They don't like you, they don't dislike you, but if you make sure you stay up on the stuff and just take care of it, it'll take care of you for another 5 years. You have a car for 10 years, you've done pretty well. Some people have cars longer than that. but it depends on mileage and all that stuff. Even just age, just sitting around for for 15 years, rubber hoses and things like that ultimately need to be changed, even if the car has low miles. So there's my auto tip for the day. Take care of your stuff.
Okay. Well, I think that's great advice. Guys, big news out of Apple. The new big news is that you get your phone from Apple, you get your apps from Apple, and now it looks like you may get your dial tone from Apple. Apple is in talks to launch a mobile virtual network operator service in the U.S. and Europe. Sources close to Apple say the company is privately trialing an MVNO service in the U.S., but is also in talks with telecom companies in Europe about bringing the service there too. Now, basically, what this means is Apple will come in and they'll buy a wholesale block of time, space, whatever you want to call it, from one of the big carriers already out there. I don't know if they'll go with AT&T or if they'll ride on the Sprint backbone. It doesn't say in this little article. So the day will come, potentially, I mean, they're already testing it, where you get your phone from Apple, you get your apps from Apple, you get your music from Apple, and the actual phone service that operates your Apple phone when you make phone calls, go on the internet, your data, all of that from Apple. Now, they're not going to attempt to build out their own network. That would be far too costly. They will simply become resellers of some of the big networks, and in fact, they may use more than one. I don't know. Had you heard about that, David? That's a pretty big deal.
No, I have not heard about that, but the brand, the brand of Apple is so compelling to people. Everyone loves it, that Apple everything is what people want. And companies are doing a lot of work to emulate Apple's the whole look and feel of their products. Companies from BMW to many others are attempting to take that and run with it. There's companies that are going to Apple to license Apple to help them be like Apple, but it's a different company. It's a car company. So BMW is doing that, and it's a very compelling brand, and I think a lot of people would like to have Apple in their life in other ways. They're fanatics about it, and you don't have to be a real fanatic. You just have to be somebody that likes well-designed stuff. Just a quick little something. One of my tech guys, Johnny, that he had a full-time job here for 9 years. Recently went. He still works for us, but it's on a part-time basis. He went to run his own thing, and he's doing his own thing, but he did not like Steve Jobs. And I can tell you that there are many people, the reason they didn't like Steve Jobs is because Steve Jobs demanded perfection from them, where they were used to giving much less than that. And that's why the products are so perfect and so beautiful, and they work so well. They don't get that way by accident. They get that way because somebody is kicking everybody's tail to make it that way, because programmers have a way of, I've been around in my whole adult life, of trying to tell you how it is, and you can't tell Steve Jobs how it is. He knows too much, and he literally would beat it out of them to get the products to this level so that consumers could have this type of product. So yeah, I can understand why programmers might not have liked Steve Jobs.
Oh, Mark Cuban says he would consider being Donald Trump's vice president if he asked me. Now,
Wow.
There's no love lost between myself and Mark Cuban, but boy, that would be one heck of a ticket. I would have to swallow my pride and my wounds. It's not hygienic to lick your wounds anyway. I would have to just realize that, it says in the Bible that we need to be, let's see, how did they put it? Wicked as a serpent, but gentle as a dove. I don't know that I got that exactly right. I think I may have. But point being, these are two men that know how to run a business. Now, this is a country. We're talking about running a country. Do they know how to handle military forces? Do they know anything about combat and engagement and all of that? I don't know, but they do have, you know, the chiefs of staff. They've got, they have men in place to fill those positions. Support for Trump is not slowing down. The latest poll, there isn't any sign of it slowing down ahead of the first GOP presidential primary debate this week. A new Monmouth University poll published Monday found Trump not only ahead, but he is also ahead with a widened lead. He now has more than a 2-to-1 advantage over his nearest rivals. Republican support for Trump just continues to grow with no clear sense of who his constituency really is. This makes it very difficult for his opponents to figure out how to take him on in the upcoming debate. Debate hosted by Fox News is Thursday night, and national poll results will determine which candidates make the cut. Trump earned support from 26% of Republican voters, according to the poll, compared with roughly 12% for Jeb Bush, 11% for Scott Walker. No other candidate had more than 6%. Oh my. I don't think he'll ask Cuban to run with him, but has he even intimated who he might consider as a running mate?
No. I don't think there's been no talk of that as far as I know. And you know, Trump's ability or not to do these discourses back and forth on Thursday and some later ones will give people a much better taste of who he is and some wider views outside of the very kind of narrow ones that he's been talking about, because people want to hear more about what he wants to do in other areas, you know, not just the few narrow areas that he's talked about. I personally love the fact that Donald Trump is in the game. I love the fact that he is, you know, there's a possibility for him to be president of the United States. This country needs somebody who has some real wisdom and some real business acumen and really knows how to deal with people. That's one of the things. If you forget your vitriol, you know, if you have it, for President Obama and his, you know, so many questionable things about him, if you put all of that aside, one of his actual deficits in his daily job as president is he does not know how to manage the downside. He doesn't know how to manage people. He's weak with people. He's soaring in his rhetoric. But when you actually have to be in a room making a deal, everyone gets him. Everyone gets the better of him. And this has happened time and time and time again. He doesn't know how to say no. When he's supposed to say no, he says yes. When he's supposed to say yes, he says no. That's one of his actual issues. He doesn't have a backbone and character. Donald Trump is the antichrist to that. He's actually able to tell everyone how it is and how it's going to be and really negotiate a real deal. You know, to President Obama's, you know, not credit, but maybe he's never been in situations in his life where he really had to do that, but Donald Trump as a businessman has been. And this would be very unusual because we have not yet had a businessman president. Not that he has a real, for sure, chance yet. But this builds his brand wonderfully, and like I said before, I think he figured out that this was a win-win situation. Instead of saying I'm going to run and then backing out like he's done on a couple of other occasions just to get his name out there, now he's in the game. Well, so he has a win-win. If he wins the office, well, then his brand goes through the roof, and he will have to get other people to run parts of his business for him and so on. If he doesn't win but does well in the polls, his brand does fantastic. So he has a really, really good high probability of doing great for his brand and possibly for the United States of America just by being in the race and just by showing people what it looks like to be strong, what it looks like to take no crap, what it looks like to believe in American values. Because that's another thing this American president doesn't really show us. He doesn't seem to have a real display of American values. He doesn't resonate with American values. he may talk about it in speeches and so on, but I don't get the feeling, this is where Rudy Giuliani was coming from when he made his comment. I also don't get the feeling that this president's really on board, really, with American values. He really isn't there. I don't get the feeling of American values from him and wanting to bolster them up and so on. I get the feeling, and quite distinctly the opposite of that, which is that he believes others' values, like Europe and so on, are much better than ours, and possibly the Middle East's values religiously are better than ours. I mean, he's distinctly made comments that are very anti, not just Christian, but just anti-Christianity and many other kinds of faiths. You know, our enemies are closer, you know, they're taking advantage of us through deals. Our closer allies, our friends, are not as close to us anymore. It's all been flipped around. And I've said this a million times. We didn't get here on his values, the ones that he's espousing. America got here on American values. That's how we got here. Hard work, independence, and so on, freedom, opportunity, incentive. We got here on those values. America got here, but particularly on the American people. And we don't have a cohesive feeling in America for American values now. Everything is up for grabs. Everything is a divisive breakup of those American values. So with somebody like a Trump, and there's other great runners too, Dwayne, aside from Donald Trump, there are some other great people in this race on the Republican side that would do a good job. But certainly Donald Trump will show some backbone, and it's much needed, even if it's just a display for all of us to watch. It's much better than not having it there. So I applaud Donald Trump's presence in this, and I hope he kicks butt. That's my show. Good night.
All right. Well, he's done great on the small stage in these town hall type meetings. I mean, he packed it out in Phoenix. You couldn't get within miles of the convention center. People were rabid to see and hear this guy. People on both sides of the fence, those that love him, those that hate him, and those that just don't even really know who he is other than that guy on the TV show, The Apprentice. So how he plays on a national stage, that's really gonna raise the bar for all of the others who are running with him. He's either going to come out Thursday night not looking so good, and the other guys are going to have a chance to show their eloquence and elegance, etc., or he's going to come across as the hard-hitting guy who says it's time to make America great again. And people are going to love him, and I don't think the Republican Party will have any choice but to put him on the ticket. So let's jump to the market.
I was just going to say, I just want to say something. I think you made a good point. It's rare, but you did make one. No, I'm just joking. You made a good point, which is that one of the benefits of him being in the race is that the other contenders now have to raise their game because there's too much. It's too obvious now that Donald's strength and his willing to take on and speak from the cuff and tell him how it really is, those are traits that are obviously resonating with the public. And these other guys who might look nice in a suit and stare at their teleprompter, they're going to have to raise their game. I think that's a good point. This actually raises the others' game in the Republican Party. And so that will be interesting to see how they spice up their game and how they become a little stronger and a little more decisive and so on, perhaps in their presentation. So that'll be interesting.
Okay. That will be. I'm looking forward to it. I'm excited now for Thursday night. I really want to see this. This is one I won't nod off. I will stay awake for this. Do you know what time Thursday it's going to be? Any idea what time it's going to be on Thursday?
Sorry, Dwayne, my mic got clicked off there. I said I don't know. I'm sorry, okay. I don't know the schedule on it at all. In fact, I just heard from you that it's Thursday. I had not looked at the news.
Okay. All right. Well, with that, let's jump to the markets. Guys, any market questions that you have for David, go ahead and get them into the chat box. And David, if you're ready, I've got the S&P 500 E-mini futures up This is an hourly chart, shows last Sunday night's Globex Open, last night's Globex Open, and this is where we are on the week so far. Go ahead. I think your mic got shut off again, David.
I'm sorry about that. That's my error. I've changed something here, and I have to flip that back, so it's not so easy to do that. Okay, what I was going to say is that we, I don't know if this is a delayed reaction to the Puerto Rico bankruptcy or if that was already priced into the market. In terms of fundamentals, I do know what this is technically, but fundamentally for the reason behind the decline and so on, I'm not sure. We do have Puerto Rico, which is defaulting on a very large payment. They've said they're not going to pay that payment. I know that must have a ripple effect throughout the United States and perhaps beyond. It certainly would have some kind of effect on the market. When we go to the technicals, the technical side of the market, on Friday, we had been forecasting that the market was going to go up to 2108 to 2109 prior to any more important reaction. So in other words, while the market's been advancing, if you go back to wherever we've been advancing from, while it had been advancing over the last, let me just grab a chart here, give me a sec, because I'm speaking without it in front of me. So while the S&P has been advancing from its last daily reflected wave bottom, and again there is there's the value of that because that called the turn for the market up. While it was rallying, we indicated that although it had reached 2091 or some target that we'd given out, that the market would not have a larger reaction until it got to 2108 to 2109, which we were forecasting that they would reach that number. And then on Friday, we gave out what the forecast was which was that having completed the 2109, 2108, that the market would decline to 2084, 2087 into August 3rd, which is today, Monday, August 3rd. So they did a little sachet today, earlier, where they looked like they were starting to firm up, and that's a little tricky behavior. They closed $1 above 2095, which was neutral to 2095, and then turned back down, and we felt 2095 was an important level for this move to start from or fail from and then continue. Either way, they did, and we've gone down as low as 2080. I think lower prices are still indicated from this point, if I'm not mistaken. I think we're going to see somewhat lower prices here. We've given those out as well. But the 2087 and 2084 that were expected on August 3rd has completed now. So we'll watch how the market handles this, and we'll continue from here. But like I said, I do think lower prices are still indicated. And while I'm saying that, I'm going to double check a chart to make sure that I do have that information correct. Give me just a moment here. So yeah, it's basically completing everything that would have needed to be completed. It was a little bit in an unresolved position on hourly charts last week, late last week, and then today they did the on-time numbers that we talked about. So I think we probably will see a little bit lower here. So I'm not concerned that this is the end of the move just yet. So I hope that's useful. If you're in our, pagetrader.com, if you're taking a trial, you can do so and get all the information on where we think the market's going. So that's what we specialize in. So that's the S&P. And if there's any questions on it, I'll be happy to answer them as best as I can. But that's pretty much everything. Today is a culmination day, so to speak, for this move down.
Yeah, let's see what's in the chat box, guys. What do you got? It's going to be 9 p.m. Eastern on Thursday, according to Bruce.
Okay.
Gideon, is there a reason why we're discussing politics? We discuss all sorts of things on this television program or on this radio program. So I just, I want to acknowledge your question. Let's see. Looks like bonds is the first question for you, David. I'm trying to see if there's anything here on the S&P. Okay. Couple questions. Oh, here's one S&P question from Quack. When is the next weekly bottom for the ES?
Well, I can't give you that now. Not that I'm withholding it, but I think that broader, bigger picture stuff for us, for the S&P, remains that this is a yearly top that we're putting in our work. The year 2015 is the top of the market as far as we're concerned. Is it possible that we're just wrong? It is, but it's unlikely. And that doesn't mean unlikely because we're always right. It's unlikely because we're using reflected wave, and anyone that's been to our course for reflected wave knows the condition the market's in. That's all we're using to know that. But that's enough. That's enough for us to know that there's a very high probability. So because of that, because 2015 is 1 unit late, 1 year late, we have to be really observant of the fact that we could have a really good crack to the downside at any point, which would start the multi-year decline underway. So we're not calling for an outright crash or anything like that at this point, but we are calling for a larger decline that would take us perhaps, a number of years out, and we wouldn't be making new highs in the S&P. Individual stocks can do very well, even though the index isn't making new highs, so it doesn't mean we won't have a really good stock market and so on in general, but the index is its own thing, and it represents a lot of stocks. So we're looking for a multi-year decline in the S&P from the highs we've put in. They have not yet closed weekly below 2055. This is longer-term stuff. So 2055 is not important on a daily basis so much, but on a weekly or monthly basis, it actually is important. So if we close below 2055, that isn't the weakest position. It's just no longer, the market is no longer in the strongest possible position. Even right now with today's decline at 2082.75, we're still in a runaway bull market, technically on a larger term. And so when we break 2055 for us, that takes it out of the strongest possible position. And then now more normal things can happen to the market on the downside. And that means, potentially a multi-year decline. So individual stocks we're not so worried about, but the index itself is important to us and to all of us. And a big move like that is probably in the making at this point, we think. So I hope I answered Quack's question without going into the last weekly bottom, just to go back to it, was the week of, and this is reflected wave as well, was the week of July 6th. So that's about 4 weeks ago. And we've not really rallied. We had a good rally, but it wasn't something that took us to all-time new highs or anything like that. So there you are.
Okay. Seems like on the S&P did 09.25, maybe that's a typo, did 0.0925 move high enough to satisfy the up move since they did not hit 2055? That question is from Tim.
Would you repeat that? I didn't quite understand it.
Okay. On S&P did 09.25. 09.25. Okay, 2009.25. That's what Tim was trying to say.
Okay.
Did 2009.25 move high enough to satisfy the up move since they did not hit 2055?
We had a 2008 and 2108, 2109 target, and they completed that. So it completed that. I'm not sure I'm understanding the question, honestly, with regard to the 2055. They tested 2055. They rallied off of it. We've been moving back and forth, chopping back and forth since then, and they've done everything that we would normally expect them to do on the upside.
Do you mean 20? We haven't touched 2055 today.
No, I think he means previously when we did. Has it rallied enough off of that?
From back here when we hit 2055?
Yeah, from like the July 6th time frame.
Yeah, okay, because the swing low of 56.5 and a swing low of 56.5. So maybe he's saying that didn't quite hit 55? Is that?
Well, maybe what he's asking is that since it didn't hit 2055, is that bullish, and did we rally enough off of something like that? No. Okay, let me assume that's
Sorry,
the question.
he meant 2109 and a quarter, he said.
Yeah, okay, and I got that. But I think he's asking is the fact that we didn't hit 2055, we got down to 56.50, and if we imply that as strength, was this rally big enough to be believable that that was the strength that would be implied in that? And I would have to say no. We had a decent rally. You know, they went from 2056 up till 2109, but that has to be considered pretty normal. That's not something, you know, that's not really obvious that that's a big rally. It's just a normal size multi-day advance. So that's all. I don't think it hasn't implied that the strength that we might have expected was not there if you're counting 56.50 as a miss of 55. We knew it would go up. We had a daily reflected wave bottom, but it hasn't done anything extraordinary. As a matter of fact, in the instance where we were saying that they should, you know, the first important decline would come off of a test of 2108, 2109, this decline is going to be bigger than it might normally be if the market was strong from 2056.50. So that's what concerns us, is that we're seeing sort of mixed signals in the market up here at a point where we might be concerned about a larger multi-year decline, and that's the point that we're at. So I hope that makes some sense to the question if I'm answering it the way he meant it.
Okie doke.
Dwayne, you have a guest coming on here, do you not?
Yes, I do. And that's why I'm trying to move through here as quickly as I can. Bonds. Do you have anything on bonds? That seems to be the only other market question.
Okay. Let me switch over there real briefly here. And the bond market's had a hell of a rally. And I just want to mention something. I have said this on the program before. It's not really a forecast, but I've said a number of times that I really think it may be into next year before we see the rate hike in bonds. And this rally, the one that we've had now since since July 13th, this rally actually is one of the pieces that would help indicate that they're not going to be able to justify a rate increase if this rally stays intact or we go much further. We have a lot of the year left to go, but this is a surprisingly big rally for a bond market that's anticipating a rate hike. And, you know, this changes some of the fundamentals that they might base the rate hike on if the bond market stays relatively strong. We'll see. They can do anything they want. They could, in September, they can just say, hey, we're doing it. But if they're following the market and the market is here or higher, it does put into question whether or not we're going to see a rate hike this year. And my feeling has been that we might, it may well take us into next year before the bond market does that. One last little thing I'll say with regard to the technicals. We had been looking for, on Friday, we had put out an indication that the bond market would advance up to 157.01, which they reached today. They were at about 156.10, so it was maybe a 20, 22 pip or something move. But the fact that they're above that level is important, and if we close above it, that's also important. And although I'm not going to go into a lot of the details, one other level that's important to us today is 157.17 with regard to a daily close. So if you take a look at that, I think we'll be able to make some judgments about what the market is going to do with the next few days here. So keep an eye on 157.17.
Okay. All right. Anything you want to share real quick on gold or the euro?
Nothing in particular at this point. We're watching both of those. I think those are markets that we're waiting to see a little more, confirmation and so on.
So the ES, you're looking for lower prices.
Yes.
Bonds, one heck of a rally. Gold, you're waiting. Euro, you're waiting.
Waiting.
Any other market that you
there's a few others that we're looking at and we're keeping an eye on, but I think I know you're pressed for time here. If you want, we'll just call it a day for today, and we'll be back tomorrow and maybe have some more information on some of these other markets.
Yeah, tomorrow, why don't we just open up? We can go straight to your charts if you want.
Okay, no, fair enough.
All right. Sounds
Very good.
All right, David.
I'll see you tomorrow.
Thanks so much. Have a great afternoon.
Bye-bye.
Bye-bye now. Okay, all right, we're going to go real quick to our good word for the day, as I had said we would. Then we're going to go to our co-host Garrett, get to know him a little more. You're going to get to know him really well over time. This is part 2, the power of God's word. Psalm 19:8. Commandments of the Lord are right. Observe. Number 1, the commandments of the Lord are right. When people like Plato and Shakespeare speak, the effect of their words on us depends on what we bring to the process. Some of us may be informed and entertained, while others may be indifferent or even bored. Their words could be described as intrinsically neutral, but this is not so with God's words. They radiate like heat and light. They are sources of spiritual energy. They possess a dynamic power that produces change wherever it goes. Likewise, God's word is dynamic. It radiates transforming power that changes anyone who lives in its environment. 2, the judgments given by the Lord are trustworthy. Psalm 19:9. The Hebrew word for trustworthy comes from certainty, honesty, and faithfulness. With absolute confidence, you can stake your all on the reliability of God's word. It guarantees you that God says what he means and means what he says. You can stand secure on every syllable of it. In other words, you can live by every word that proceeds from the mouth of God. Matthew 4:4. By your teachings, Lord, I am warned. By obeying them, I am greatly rewarded. Psalm 19:11. God's word is more than just a list of do's and don'ts. It's like radar that signals you when you're in danger of straying off course and getting into trouble. Your conscience alone simply is inadequate. Psalm 19:12 and 13 says this: How can I know all the sins lurking in my heart? Cleanse me from these hidden faults. Don't let them control me. That was David's prayer. Friends, by obeying God's word, you will be greatly rewarded. And that's our good word for the day. And now we're going to pause briefly for a station identification, and we'll be right back with our new co-host, Mr. Garrett Jones. So hold tight, don't go away. We'll be right back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Well, imagine my surprise when I go to look here and I find no Garrett Jones. Garrett, where are you, brother? Did you log in under a different name? Hey, Bert, you in the background?
Yeah, what's up, Dwayne?
Can you ring Garrett and ask him where he's at?
Yeah. Yep.
Okay.
See if I even
All right.
have his number. Do you have his number? I don't know if I have his number.
I was just on email with him. He must have got bumped out or something, because we were just chatting back and forth in the email, so he knows he was supposed to be here.
All right. All right, stand by.
All right, let's go back to the chat box. till we find Garrett, MIA. Must have had trouble with his link. Okay, let's see what's in the chat box. Guys, you can't believe what an incredibly busy weekend it's been, and it's only just starting. But that's good. Business, you know, when you stay busy, you stay out of trouble. Jim has already gone. Jim said, we've all seen how great an actor president can be with Reagan, so let's see what a businessman can do. It definitely couldn't be any worse than the last 7 years. That's for sure. Yeah, let me check. Oh, let's see. Let's see if you managed to wander in yet. No. All right, well, we'll just do the show without Garrett then. Ed, what do you want to know about August cattle? What do you want to know about them? Canoe, what do you want to know about the Australian dollar? We can take a look at them. So, what do you want to look at? Canoe on the 6A. Let's 6A Australian dollar. Let's go daily. Where's it headed? Well, let's find out. Okay, I guess Bert's going to patch Garrett in. Okay. All right, we were going to go to the 6A. All right, daily chart, Canadian dollar. This thing has been, man, it's been in trouble for a long time. If we do a reverse fib from overhead down to the most recent swing low, this is a daily chart. We've been going sideways. We've been in a little range here now for 1, 2, 3, 4, 5, 6, 7 days. And we're putting in an inside day today. Now, this inside day today, okay, we had an outside day on Friday, followed by an inside day today. This actually could be significant. This actually could be where the market is getting ready to make its turn. Okay? Swing high to the swing low. Where's it going to run into trouble? All right, this is technical analysis 101. You've got your 24% retracement at the reverse fib. So obviously, there's going to be some resistance here, okay, as the market starts to rally if buyers come in and support. Now, this inside day closing bearish, it's not as powerful as if it were to close bullish, but this is what we have, okay? And so if you're looking, I'm sorry?
He's in the green room.
Is he there?
Yeah.
All right.
Just look in the audience and.
Hey, Garrett, welcome to the show.
Thanks, Dwayne.
Hey, bring your mic just a little bit closer.
How about that?
Yeah, it's perfect. Perfect, perfect. So I'm sorry, I must have somehow not communicated times properly to you. 1:30 to 2:30 Eastern every Monday. Did I fail to to
I think
communicate
so.
that?
I sent an email on that this morning, so I wanted to double check with you and so forth.
Okay, I did. Did you get my response?
Let's see if I got it. Yes, I actually just got it though, on the bio and so forth. And
yeah,
there it was. But
okay.
for some
Okay.
reason I was hitting my.
So you will be here with me every Monday from 1:30 to 2:30. I just got to let the audience know.
Yes.
That's the plan going forward. 1:30 to 2:30 every Monday. Okay. Yeah, I've got to get the bio summarized, and then I've got to get your picture on the team. And so, because what I want is and I outlined it in a blog post the other day for everyone on the Google Plus page, exactly what it's going to look like every day, Monday through Friday, what time Michael will be with us, the time for the good word for the day, that's going to be defined, Concierge Trade Alerts from the night before, forecast from the edge with David, and then our final hour of the show will be whichever co-host is with me for the day. On Mondays, it will be Garrett. On Tuesdays, it will be my old trading buddy from the world of Fibonacci, Jonathan. Many of you know him. On Wednesdays, it will be our own White Bar Jim Cox, founder of the infamous White Bar Trade. He'll be with us every Wednesday, 1:30 to 2. What an interesting life he's had as a homicide detective and a bounty hunter turned trader. And he's just really doing a fantastic job. So Wednesdays will be a real special day, having someone who has risen up within our own ranks and is continuing to rise. He has not put a ceiling on his growth as of yet. I think as of last week, he was up to his 6th contract. He should be adding number 7 here pretty quickly, and we'll watch him continue to mature right on up to number 20, which completes the 2420 blueprint. Then he will know how to proceed from there. And at that point, he will decide if he wants to grow his trading business beyond his own trading desk. We've talked about that in the past. We have that program that we will be rolling out in the future for those who do want to open their own offices across the country, where you have a college student or 2 or a single mom who's looking to earn a nice hourly wage based off of Concierge Trade Alerts. There's just a whole nother world on the other side of your trading desk. But before you can do any of that, you first have to become consistently profitable. I had an email from someone this morning. It kind of disturbed me, and I did my very best to encourage the gentleman. He said, I want to know if I can sign up for your program and start making money right away, because I can't wait around. I explained to him, I said, well, we have a 90-day mentoring program. And he says, well, I can't wait 90 days to start making money. I got to start making money right away. So I explained to him as nicely as I could. I said, the thing I need you to understand, there's plenty of people out there waiting to take your money and to promise you that you can be profitable tomorrow, but I'm not that guy, okay? And what will happen is what little money you do have will be gone in pretty short order. I said, now, we have a 90-day mentoring program that requires you to become consistently profitable. In other words, you have to be able to make $100 a day in 10 trades or less, 10 days in a row, before you can actually go live with one contract. And so if you're looking to use this to pay your mortgage next month, this is not the place for you. We don't have overnight riches. What we teach you is a skill set. What we teach you is how to build a trading business from the ground up with a solid foundation. And so I hope that he heard me. I hope that he did not take offense. I hope, whether he decides to become a partner with us or not, I hope he seeks out someone that will take him under their wing and teach him and train him, and not encourage him to just go out there and throw money at the market. because throwing money at the market does not bring success. Never has, and it never will. What it brings is anger and frustration and resentment and bitterness. It gets taken out on the wife and on the kids and on the dog and on the store clerk. It's a terrible, vicious cycle. We don't have to be a part of that 90%. We can be part of the 10% based on the choices that we make. Now, I know, Garrett, that your business is different than ours. We're in the business of training people to become traders. You yourself are a trader, a money manager. You trade for other folks. But I'm sure that you come in contact with your share of folks who would like to become traders, who want to get into the business. I'm curious, what kind of advice do you offer them?
Well, I think the one thing, you mentioned something very important there. Everybody wants to do it right now. And it's kind of like when I say, gee, I'm thinking about, changing occupations here. I think I'll be a brain surgeon next week. And the problem is you're not going to be a very good one. It's like anything else. It's like a sport, or it's like anything that you want to do well. Unless you're that rare person that just came onto this planet, like a Mozart or something like that, and was just meant to do something, all of the rest of us have to work at it. And part of the I said, the funny part is, and I said, you're going to have an opportunity if he doesn't take your advice and he goes off and goes in the other direction, he's going to have an opportunity to learn the best way possible. And the best way possible, the way any good trader that I know has really learned, is they've learned by somehow figuring out how to do everything that they shouldn't do and then doing them. And then they go, oh, well, that wasn't fun, and you remember those things. I mean, you remember your successes, but most people that I know remember their failures a little bit more. And that's just a process. And if you can have somebody who's gone through, I mean, what I tell people, to answer your question, what I tell people is, I said, everybody's got got a methodology that makes them comfortable, and what you want to do is do what makes you comfortable. Because if you're doing what makes me comfortable and it doesn't make you comfortable, it's probably not going to work for you, whether it works for me or not. I said, what I can do is I can tell you some things that I think are important. And I always start with the long wave cycle, because it's a cycle of man. I said, this is going to require some study for you, but I've broken down the important thing. I've made the mistakes here. Because I've looked at it for 40 years, and I've followed what other people said. I mean, one of the classics, I mean, Paul Erdman wrote the book that crashes 79. I didn't ask him why, but my guess is cycles were 50 years basically, and if you take 1929 and add 50 years to it, you get 1979. So I'm sure he figured, hey, I'll write the book, and when it crashes, I will have, quote unquote, written the book. The problem is it didn't work that way. And what I learned from that, he also wrote a subsequent one called The Panic of '83, which took the average Kondraty of cycles, which was 54 years, and added that to 29. I'm sure that's what he did. Again, I didn't talk to him about it, but neither one of those worked. And then he tried one other one, which was a 60-year cycle, which brought it up to 89, and that didn't work either. So the one thing we learned is that the stock market isn't Halley's Comet. Just because something happened 50 years before, could it happen 50 years this time? Sure, it could, but why? Why would it? So what I started to focus on was the sequence of events in the cycle. So I think that's an important thing. And then the next important thing that I tell people is, I said, look, in our business, brains are a dime a dozen. You don't have to go too far to find somebody that's pretty smart. I mean, you know, the other side of that's true too. But it's not hard. You know, it's not hard finding smart people in this business. But they're not all great traders. As in fact, most of them aren't. And I said the other thing that I've found is that discipline's a lot more important than brains. Because discipline allows you to keep your money.
What you just said right there, discipline is so much more important than brains. Elaborate on that, if you will.
Well, discipline keeps you from making the big mistake. And the big mistake takes away your money. And when your money's taken away, whether you want to trade or not, they just took away the ante, so you can't play anymore. I mean, that's it kind of in a nutshell. You need something to let you know when you're wrong, you know, and you also need to know when to take a profit. I mean, particularly now. Markets change, personalities change. The personality of this market has definitely changed. I mean, why wouldn't it change? And I'm sure we've all noticed, but aren't we living in a time period now where, you know, if you're a patriot, you're probably on somebody's 10 most wanted list. If you're an anarchist, you're probably in the government. I mean, things have flipped around. Good is bad, bad is good. You know, it's really, you know, coming in first in your class in school. Gee, you know, you don't want to do that because you're going to make the other kids feel bad. And what they've done is they've become successful with that. And guess what the outcome has been? The United States, as a reigning empire, which we have been, I would say, you know, it's kind of fun. It might be interesting to introduce this in the show now. People have said, gee, when do you think our reigning empire peaked, or do you think it has peaked? I said, in my view, it peaked about 45 years ago. And they said, well, you know, that's crazy. That doesn't make any sense. We didn't even have the computer 45 years ago. And I said, oh, I thought we were talking about reigning empires. Were we talking about computers? You know, I said, look, I said, the way you determine a reigning empire is when it is doing better, or the best, versus all the other countries that are out there. And I said, in my view, that was roughly 1969, 1970. And if you think about it, we were number one in everything then. It took the next at least 20, I think it was maybe 22 countries combined to match our GDP. Pretty soon we're not going to be number one in that area at all. Education, we went from number one to, well, it depends on what you read, but number 1 to number 38 if you're probably reading the honest one, number 1 to number 17 if you're reading the one that the you know, people in education like to quote. But nonetheless, it's not number 1 anymore, and so many things aren't number 1 anymore. And that's what happens when you take the focus and you make being number 1 bad. If number 1's bad, pretty soon, and everybody buys into that, pretty soon you're not going to be number 1 anymore. And what motivation would somebody who's a politician, regardless of whether they're a Republican or Democrat, have to remove that from the people of this country? Because that's removing hope.
We read an article on the show here probably a month ago. The University of California has sent out a guideline, or it was a pamphlet that included phrases that professors should refrain from using in the classroom and when speaking with students. One of those was, let's see, the job should go to the most qualified person.
Well, they're doing a pretty good. They've done a pretty good job of removing that.
That's a no-no. You shouldn't say that. Let me see if I can bring that article up again real quick. Things, California.
I hate this story, by the way. I did graduate work over at Berkeley, so.
I don't know. It's an older article. Let me just look real quick and see if it pops up. I think this might be it. Yep, June 10th, 2015. Okay. Waiting for the page to load. Come on. There it is. Nope, it timed out. Oh, because it's a college website. So let's go to, okay, the California University system. Now I've got background noise playing.
That's a sad thing, though. I mean, you probably don't even need to quote it, but that type of a quote, it, you know, there seems to be an agenda going on here that's been in play for a long time. There's a book called The Deliberate Dumbing Down of America. You know, and when you see a title like that, and it's a very well-documented book, well-written book, and when I see that title, I would think, well, the deliberate dumbing down of America. Why would anybody want to do that? If this is the home of the brave and the land of the free, etc., why do you want to dumb that down?
Here are some of the quotes from that article. The California University system advised faculty not to call America the land of opportunity, saying that it could be an example of microaggression. The land of opportunity phrase is listed as being part of the myth of meritocracy in the handout that was given to faculty members. Those are described as statements which assert that race or gender does not play a role in life successes. The guidelines were reportedly sent as suggestions for professors to avoid offending students and to promote diversity. Professors were also told to avoid handing out forms that ask students to check a male or female box. Now, the College Fix, which was the website I originally tried to go to, reports the document has drawn little scrutiny until now. When a professor in the UC system pointed it out to the College Fix, the professor chose not to attend the seminars, but myriad materials on the UC Office of the President website. I'm getting some audio bleed over. And stand by, guys, while I isolate where this is coming from and I put a stop to it. We'll get off this topic. I guess powers that be don't want us to talk about it. You guys can't hear it, but I can, and those who listen to the podcast afterwards will hear it. Other sayings that were deemed unacceptable include, everyone can succeed in this society if they work hard enough. Everyone can succeed in this society if they work hard enough. Can't say that. Where are you from, or where were you born? Can't say that. Affirmative action is racist. Can't say that. When I look at you, I don't see color. Can't say that. The guidelines were handed down by UC President Janet Napolitano, formerly the head of the Department of Homeland Security. Faculty members were invited to attend seminars to go over the advice, and it goes on and on. I'll see if I can't find the entire list. I had the whole list the first time we talked about it on the show. It was pretty stunning. Burwell has a question for you. I want to jump right into that. I have a two-part question for Garrett. Are you ready? Are you ready, Garrett?
I don't know.
All right.
I haven't heard the question yet.
All right. Here we go. Last week, you stated that you believed the K-wave winter. Okay, I think I finally found that rogue link that was playing audio in the background. Have a two-part question for Garrett. Last week, you stated that you believe the K-wave winter had not yet begun. Okay, question number one. Since knowing the sequence of events is the most important part of the cycle, Is it fair to say then that you believe we are still in the plateau period, which would have begun in the year 2000 and will not end until the bull market top arrives, as was the case in 1929? Okay, that's question number one. Let me read it again. Since knowing the sequence of events is the most important part of the cycle, is it fair to say then that you believe we are still in the plateau period, which would have begun in the year 2000 and will not end until the bull market top arrives, as was the case in 1929?
Yeah, I think that's a pretty good observation, and that is what I believe. Let me share something that I discovered and probably should write a book on, but
okay.
I'm sure the credit will go elsewhere. One of the things that I noticed when I started to study this is that it was a 50-year cycle, basically. The people at the time who were, Condrati, of his work, the works of Previs, Van Gelderen, De Wolf, some of these other economists, European economists, Rogers, and so forth, all 50-year cycle. And again, those people were from some time ago, and obviously if they were going to do research, it was past research, so it was time before that. What I noticed was this cycle is longer, and you can't break it up in two ways, and when you start to apply winter and you go, gee, if this was the bottom here and that's what it was last time, it pardon me, but it gets screwed up in a hurry. So my thought was, you know what, as I look at the sequence of events, they're going along just pretty much the way they should, but if you get stuck in that 50-year time frame, it's all haywire. What I come to believe fully is that this cycle that so many other people, including Karl Marx, looked at, the K wave, or what I like to call the long wave cycle, because Condrati maybe did the most work on it, but it's a cycle that's been there long before Condrati. It is, in my view, the cycle of man. If you notice, every species on this planet has its own cycle, and we, Homo sapiens, at least some of us, are very good at defining those other cycles we know when the whales are going to come by Monterey, and we know when the swallows are going to fly to Capistrano, and we know all this stuff. Now, we don't know too much about ourselves that's accurate, because we do a much better job on defining other cycles than we do our own, and part of the reason for that is probably in our DNA. We are excited at bull market tops, and we're depressed at bear market bottoms. And that's the way it's supposed to be, because then we get to continue with this cycle. What I noticed, Dwayne, is that this is a cycle of man, and man is now living about 78 or 80 years. In the past, the average lifespan for man, believe it or not, going back in time, not that far, was 50 years. And hence, this happened to be a 50-year cycle. Is that a coincidence? I don't think it is. I mean, they could go back and tax wheat at the mill and had records going back almost to the Magna Carta in England. And they had very clear boom-bust cycles of 50 years. Now, that's changed. So one of the things that I would say that's very important is that there's nothing wrong with the cycle. The cycle hasn't had an aberration. The cycle hasn't messed up. People just haven't noticed that people are living longer, and that this is the cycle of man, and that kind of changes things. It doesn't change the seasons of the cycle.
Well, let me hit you with part two of the question now. Do you feel that the actions of the government, and more importantly, the Fed, to prop up the stock market and the economy via excessive borrowing and spending may have extended the aforementioned plateau period of the K-wave cycle.
Yes, I mean, and my response would be, don't you think that has to happen? I mean, let's say this is a cycle of man, okay? If it's a cycle of man, you know, hey, it's a cycle of God, right? This is, you know, this was created here. This wasn't accidentally done. So if our cycle is going to expand and we're going to live a little bit longer, somehow all of the other things, not just the financial things with the stock market and the economy, but sociologically and every other thing that fits into what makes us, you know, as people, kind of expands too. You know, it's a holistic type of situation. So yeah, no doubt. This time it's done by what they called creative financing. My guess is they'll probably change that name when it blows everything apart, but but so far it's creative, you know. You know, but it's the same old game, isn't it? You know, you're expanding debt. The only difference is you're expanding it to a degree much greater than most of the people who really knew quite a bit about debt ever figured that it could be expanded. And at the same time, you're dumbing down America. And when I look at this and I'm not breathing deeply enough, you know, it's pretty easy to get kind of morose when you're thinking, gee, the country's not pushing anymore. Now you're getting, you know, heretofore great universities like University of California coming out and doing this stuff. Obviously, if California is doing it, somebody else is doing it. So this is a prevailing mindset. It's been introduced actually over a very long period of time that now has gone through a few generations. And back when I was going to college, you know, it was just, oh, some of these wildly liberal things, they get some crazy thoughts that come and go and so forth. And actually they won. You know, now it's happened, and the results have been seen for really a long time. If you want to go back in time, again, my argument on what would be the peak for our empire, probably 1970. You're looking 45 years ago. And that surprises people, but if you think about it, look when there was really at that time, there were really you know, two worlds. There was the United States, and then there was everybody else. Well, we've merged in with everybody else now. We're we're certainly right in that mix, and that's happened through a change of attitude. What made us great initially, unfortunately, I mean, certainly is still honored by some people, but as far as the masses, you know, that education, quote-unquote education that was planted into the system has taken hold, and it's a real cancer. And the scary part to me is I don't think this is a political thing. I don't think this is Republican and Democrat. I mean, frankly, if you press me on that issue, I think Republican and Democrat is there for our entertainment. In other words, let's let these guys get really focused on whether they're a Republican and a Democrat, and while they're doing that, we'll pull the strings back here and do what we want to do. And isn't that really what's going on? But when you see this in education and you see this kind of a thing, you've got kind of a complete breakdown, and that's what kind of leads up ultimately to your final summer, your market top. And if you notice, it takes you a long time to get to that top. But getting from the absolute top to the absolute bottom is fast. That's a fast part of the cycle. You ever notice that tops and bottoms, I mean ultimate tops and ultimate bottoms are real close to each other? Whereas if you go from historic bottoms to the historic top and you measure it that way, it's a long time. I mean, you know, 80 years. It's a comparison of, you know, 80 some years and 3, 4, 5 years. So that winter, the interesting thing about it, this of course isn't really the peak. I mean, this is the peak now, your real peak was probably back in 2000. So we've had 15 years of, made up peak, and then however long it takes to get to that ultimate bottom. So realistically, it's a little bit longer than that. But when you look at it in nominal numbers, you're looking at pretty close proximity between an ultimate peak and an ultimate low. So winter can happen quickly. Anyway.
Okay.
Did I answer the question, or?
I think you did. I think you did. Now let's go back to Burwell here. I think he's got another question.
I like his questions.
Oh, great guy. Yeah.
I'm glad he's out there.
He's very well versed in many things. President Obama is currently speaking on clean power. I'm going to go to an article that was shared with us by Wayne on I was just pointing out to you guys, based on the alert last night, 17,540, as we find ourselves here at 17,440, right there. Okay, so that's from 540 to 440. That's a 100-point drop in the Dow at $5 per point. That's a $500 per contract drop. Okay, based on the Concierge Trade Alerts from last night. So the bonds, we had a $1,000 move in the bonds. Okay, we had a $1,000 move, a $1,500 move in crude. Soybeans, we spent so much time figuring that one out, I forgot now. We had a $500 move in the Dow. And based on our alert last night, we had well over $1,000 drop in the Russell. Okay, gold. We actually have some calculable gains, and I'll do those right towards the end of the show. I just wanted to breeze through those real quick because I'm going to put this chart back on the S&P. Notice this doji that formed inside the weekly trading zone from last week, but today being only Monday, there's this great carryover effect that the zones have. So let's watch and see where we close this next hour. We have about 40 minutes left in the hour. Our candles, because this is a Globex chart, open at the top of the hour, not on the half hour. Burwell states, in the past, or comments, in the past you have stated that the institutional index, XII, is the better gauge of what the institutions are doing versus the more commonly followed averages such as the Dow, S&P 500, or the NASDAQ. Garrett, can you provide your current assessment of the XII as we approach what may be a significant top in the market? And perhaps, have we already seen that top?
I think we may. Oh,
I threw the tail end on, and perhaps we've already seen that top. So go ahead.
I can show you my chart if you'd like.
Yeah, let me shoot that over to you real quick.
I'll put.
Are you ready?
Yeah.
Okay. Here we go. All you have to do is accept and then tell it which screen you want to show. And got it.
Okay. I'm just doing some stuff in this chart as we move along. Here's, regarding his question, this is the institutional index. This is a weekly chart. So what you're looking at here is back from the 2011 low, and this is kind of the price channel vector in blue that's there. And we haven't violated anything at all. So this is still a very valid channel and will remain so until we break down below here, this blue line. Now, in the meantime, however, coming back from this point here, which is early December of last year, we've had some very clear tops, and we had what you'd call here a you've had what would appear to be a false breakout here, because you're there's only one close above it, and then you closed well below it down here. So that almost implies that maybe you've got your top in now. But what you've got is a very meaningful trend line here, and then you've got your bottoms line, and this is clearly the line, by the way. Everybody draws lines different ways. I've been drawing them for a long time and draw them sometimes a little bit differently than others, but the importance of a trend line is, I mean, trend lines is a price line. That's the importance. But what you want to see on a trend line, the more hits you can get on that trend line, the more valid the line. Now, you can't draw a line that hits more points than this line. So that's your valid bottoms line. So you've got yourself kind of a rising wedge here that's had the classic breakout and failure beneath it. It's rallied back up to it and now dropped off. It doesn't get much better than that technically. Now, we've got people that appear to be manipulating the market maybe a little more than it's happened in the past, but the bottom line on that is that that's our playground at the moment. So if people are messing with it or not, there's not much we can do about it. As they say in golf, you got to play it as it lies. So this, though, is saying that you're breaking down. Now, this is my indicator underneath here, and you've got a bunch of divergences here. I mean, you've got a major one here where this starts, and where this starts to vector over. You've got your price vector coming up, and then you're clearly something's happened from the end of last year. That same robust movement where you tend to hug the upper trend line pretty quickly. We haven't been hugging it since back here in December. So that's important to be aware of. And then we've had these divergent sells right along, and we've got another one right here. And this one actually came off this ultimate price high here. So this ultimate price here is probably your second or third divergent sell, and maybe if you want to go back to here, maybe it's your third or fourth. So that would appear to be, potentially, it looks like there's a change going on in the institutions that is probably going to define itself pretty quickly. So if you certainly, what you need to do now is get above that red dotted line. If that happens, then you've got to bring your discipline in and say that maybe there's going to be another run to try to get everybody to get into this market before the party starts to the downside. But otherwise, this looks like it's starting in the direction. Certainly looks like it's starting in the downward direction. I mean, first step is to break this prior low, but the bottom line is if you do that, you're also going to break out of this channel here. So that's what that looks like. The other thing that I look at, let me see if I can find this other chart here. Here you go. Let's look at this one. This is the semiconductor index. And the semiconductor index is a pretty good market leader for whatever reason. It made its top here in 2000. You made your bottom here in October, so that's not such a great lead. But here you made a bottom in November of 2008, not March of 2009. Here you made a top in February of 2011, not May of 2011. So it's leading here, it's leading here, it's made a turn here. You've got this railroad track pattern here with a double top. That's probably going to be your top in the semiconductors. And it's a pretty good leader of what's to come. So this, combined with the institutional index, tells you that you very likely have a top in place. And if you catch it now, odds are you're catching a real early top. So that's what it looks like at the moment.
Okay, let's see. Burwell said, yes, thank you very much. That was a great answer. He appreciated it. Richard comments, have found that a big portion of cycle, looking at cycle lows especially, can take place in the last 20% of a cycle. Garrett, your thoughts, please, on that observation.
Let me ask him what, you mean as a generalization? I would agree. But again, it depends. I always like to talk about, you know, what are we talking about? Are we talking about anything in particular? Because, you know, a lot of old comments like, gee, what happens if you expand the money supply and lower interest rates? Isn't that a boon for the economy? And the answer in your graduate school is going to be yes. But the answer in reality is when? What are we talking about? Sure wouldn't have worked very well in 1980, would it? Or 81, when interest rates were going through the roof. You know, interest rates needed to go through the roof to stop things. So, you know, because it was overblown. So it kind of depends. I think the real answer to that is it depends on what you're talking about, and it depends on how the cycle in that vehicle tends to work. So, you know, that's you know, in general, yes. In specific, it kind of depends upon the specific situation. Is that more confusing than the question?
Well, let me ask Richard. Richard, does that answer your question? Let me get the chat box back up here. He said, yes, indeed it does. Okay. Now, again, Garrett, the Dow Jones, the DJTA peaked last November. The DJUA and the bond market peaked last January. So the DJTA peaked last November, the DJUA and the bond market peaked last January. Do you watch these as early warning signals in the way you do the semiconductor index?
Let's see, that's a good question. Yes, to some degree. I watch the semiconductor index in that respect more, but I do watch these. If you look at the utilities and you look at the transports, you know, basically that's diverging from the industrials, and clearly that's a great hint. And what it is, if I'm looking at the semiconductors and I see this happening in the, I mean, I just happen to pull up the transportation index chart. I mean, when you look at that, it peaked here back at the end of 2014 and kind of hung around there for a while over here to, you know, earlier this year. But you've got a clear downtrend, and then you've got that happening, of course, in the AD line too. So you've really got a lot of things that are showing deterioration here. And what's kind of interesting about it, let me pull up a Dow chart. Let's just do it right here. If you take a look at this in the Dow chart, we're seeing, oh, well, we've got a downtrend here, and boy, this thing has already started, and boy, you've got, you know, certainly a few waves down here. Maybe it's ready for a rally. Of course, you know, breakdowns happen from lows, not highs. So, but if we do this to it and bring up a monthly chart, and if you give it a little bit of time, like 60 years, let's say, all of a sudden, you know, you've got a situation now where you're way up here in the rare where the air is rare. You're up here in the stratosphere, and you haven't even broken down from this top pattern. So if this low is going to go down and break this last low, which I think is likely, you know, anybody that gets on this train here is got an early boarding pass. That's for sure. And you know, like I say, even any way you draw trend lines on this thing, you still, I'm sure you haven't violated anything yet by a long shot. A little bit different from the Dow and the in some of these other indicators, but let's just see. Yeah, I mean, that's, you know, once again, with the institutional index, at the moment, you're kind of in the middle of the channel, but the bottom line is, you know, what's really going on. And, you know, you're going to have to break this low here, which is the last low, down at 17, let's call it 17,400, so another 100 points or so. But I think if that happens, you're down to test the low before this in a hurry, and that low is, you know, that's 350 points or so lower. So you could get a quick move down there. And it's interesting today, you know, I was looking at the 65-minute chart, and it was getting oversold. And I thought, well, here we go again. You know, you get oversold, and this crazy market, it'll turn around and rally. You know, you get a triple-digit move to the upside or the downside, and then the next day, you know, it happens in the other direction. That's something that's been happening in this market. But all of a sudden, it seems to be holding on to this this price action on the downside. I just, you know, we're still down 178 points, so it's not giving it up very easy. It did rally, I saw a while back, where it was down 150 or so, but then it's come right back down again. So, you know, maybe we're going to get a follow-through this week to the downside, where we actually get something that follows in price for, you know, maybe a few days, or you know, a good weekly down. And I notice a lot of my indicators are down around the zero line. And heretofore we bounced off that, but when you break from that, then you can follow it up with sometimes with some pretty serious selling. So it's going to be interesting to watch this week.
There was a question from, let's see, Jim asked, could you take a look at a 50-year chart on gold? Could we have seen the highs at 1921 that will last for 20 to 50 years?
Let me show you my favorite chart here. This is my gold chart now.
That's my Timothy O'Leary chart.
What's that? Oh, yeah. Oh, I believe me, I can be worse.
Okay.
I can expand on this. Let me explain what this is. Here, these lines here, the blue and the whatever that is, magenta line, they're 200 and 300 day moving averages, and they're just a moving average that in general work pretty well with gold. And I've been watching gold, you know, since before, you know, since prior to it being held at $35 an ounce. So I was in for, this is my third major gold bull market. And I've been bearish for a while on this. If you go back to the 2011 top right here, I've noticed an interesting pattern. It's come down in an A, B, C, D, E. You've got your triangle here. You break out and fail. And then it drops. When it drops, you look for that pattern again. So now you've got your triangle coming down. You've got an A, B, C, D, you'd think E here, but then it goes A, B, C, E, and your E's down here. Again, you break out and fail. See this can you see this yellow line in here?
Yeah,
in
I
my
see it.
Timothy Leary chart?
Mm-hmm.
I put that yellow line in quite a ways. The market was back here, somewhere back in here. I
Okay.
put that line in just because it looked to me like that's where we were headed.
Based on something proprietary or?
Well, yeah, I mean, certain,
Okay.
based on watching gold for a long time, but based on this decline here,
Mm-hmm.
you know, wondering whether, you know, gee, is this an ABC, and now we go on up here.
Okay, so, well, okay, if I'm reading this correctly, then directly across from that yellow line, or it's actually like a yellow bar that you're referring to?
Yeah, it's a bar. It's a little price bar.
So,
it starts about here and goes over there, and I just put that in there, and, you know, gold was any
right, but that ties into that pivot low down there, correct?
Yeah, now see, that was one of the places where I thought gold would hit. And at the time, you know, I don't talk to too many people on gold because I've been on the gold thing for a long time, and throughout the entire time that I've been on it, somebody's telling me I'm crazy for being involved in gold, and then if I'm not crazy for being involved in gold, then my opinion's crazy. And this goes back to 1970. Merrill Lynch told me.
Are you long-term bullish on gold or not?
You know, I'll tell you what. I'm having a great internal mental battle with that myself.
Okay.
And I've got a lot of history in this. I'm looking at it. Look, if Mother Nature usually wins the battle sooner or later. So if you look at where we are in the overall cycle, that's the question of, well, gee, are we going to have inflation or deflation? So what do you think?
Are we going to have inflation or deflation? I'm going to be honest, and I don't know.
Well, I don't either. But what
I mean, I could pick one, but I don't know that I could make a good argument at this because the rules are constantly changing.
Well, the other problem we have is that we have what I guess I call the string pullers out there that happen to have an agenda. And that's a little different. I mean, maybe that's not different, but I think they see their agenda coming to fruition here. So maybe that requires certain things to happen. But generally, if we're just looking at economics, we've got, you remember that if talking to me every now and then, it's hard for me to have a conversation where I don't bring up that every 40 years or so something bad happens, every 80 years or so something really bad happens. That just happens to be the history of this country. That's the way it works. And what
about before this country? I mean, if we just keep tracking that cycle back in time.
Yeah, in other words, the easiest place to do, I don't know if it's the easiest place. Maybe there's, you know, maybe somebody's got, you know, something over in Croatia where they've taken it back further. But the one that's pretty easy for us Americans to follow, if we want to follow something, is taxing wheat at the mill in England, which goes, like I say, back almost to the time of the Magna Carta. And there it's like a 50-year cycle. It's a boom-bust cycle. So it's a little shorter, but oddly enough, you see that every 40 to 80 years, and you know, we've gotten so programmed to be politically correct, which in my view, nothing could be more incorrect than politically correct. Why? Because it takes away freedom of speech, just like what we're talking about at Cal and anything else. It doesn't matter whether you're a Republican or a Democrat. It kind of matters whether you love the country,
right?
The way it was kind of intended to be. And I mean, this country was never intended to be a democracy. I grew up in a democracy, and we applauded the democracy. I think when we were applauding it, Thomas Jefferson was rolling over in his grave and saying, no, the beginning of the end. All of our work went down the drain. However, we had quite a few decades of things being okay, but now we're starting to see that. So anyway, getting back to that every 40, every 80 years, what happens at the 80-year cycle, to be politically correct in my way of thinking, is speak honestly, speak openly, use your freedom to say whatever you want to say. And I may not agree with you, but I respect you having the freedom to say what you want to say. By the way, currently that's not politically correct, but those people are wrong. We'll find that out. The deal on this is you have 80 years of buildup that happens in two cycles of debt buildup. One is a cycle coming out of a depression where you basically have no debt because it's all been defaulted on, so you're starting from a base of roughly zero, and then you built up debt into the LBJ time period of the Great Society, and then it builds a little too fast and you go through that corrective phase that happened in the 73, 74 Great Recession, the biggest recession after the Great Depression. And then you go from a fairly high level of debt, at least comparatively, and build it to a degree beyond anyone's imagination, such that it's a parabolic growth well beyond any logic or any reason. And that's your second debt phase. And now, what does nature do? Nature says you have to correct the entire debt buildup from where it began. So to me, it's deflation. And I think if you look at things like like oil, I don't know, is oil going down now because Obama is trying to put pressure on Putin? Who knows? But I think whether he was trying to do that or not, if everybody out there in the world, or we know who the players are that are doing this stuff, if they just kind of let things alone, I mean, wouldn't this situation that we're in now be a lot better off if they just let the economy do what they wanted to do? What did they do? They started QE and they started zero interest rate policy. And then you had a real estate problem. Well, gee, if you went in with your first QE and you paid down a third or a quarter of everybody's real estate mortgage, which of course isn't fair because some people didn't have mortgages, but what's fair anymore? You probably wouldn't have had the recession, would you? Who knows? But that's probably not their intent. So, now you've got a situation where when people lost their homes, now they have to rent, but are rents low or high? Well, they're extremely high. Well, they're, in other words, they've really messed things up by putting their hand on it. And you have to ask yourself the question, are these people that stupid? And my answer is, some of them, there's no question. Let there be no doubt. But on others, I don't think so. And some of them, I think, are very smart and very evil. But that's part of history, and we accept all that in prior history, but when you're living through it, it's kind of a different deal. I think you're going to see a breakdown. What should happen if there's a hands-off policy is that you should have a serious deflation, basically just like in the stock market. When you get a real strong move up, you need a corrective move to get back to normalcy, even if that normalcy is still overbought. So that's what we should see. What we will see will be interesting, but at some point, I think nature overtakes, whoever's trying to pull the strings otherwise. So to answer your question on the gold, that's my problem. I believe gold is there to maintain the purchasing power of whatever vehicle you're purchasing with. So what happens if the dollar gets kicked out as the reserve status and all of a sudden its value goes to 50%? If gold drops 50% along with it, does it retain its purchasing power? See, that's the problem that you've got. Gold could do what it's supposed to do and you could still see the price go down. Right now, my target here, by the way, on the chart, I mean, what I can deal with is the short term. I've got a target down here that's about 1,000. I'll be surprised if that isn't hit. But I just happen to notice this blue line. See this blue line?
I see it. Mm-hmm.
Yeah, this is a very important line. It should bounce off that line. And what that line is, if you go back in time, it takes you all the way back over here to 2005, and it comes up through this low in 2008, and that's really a powerful long-term price trend line. So we probably ought to see, even if it drops down there, we probably ought to see a bounce off that line. And that's actually, you know, pretty close. This is a weekly chart. So this week that price is, where is that price? Let's see, that price is what, 1,050? Maybe
Yeah.
a little more right around there,
Right.
1,051 too. So that should be pretty good short-term support. You ought to get some kind of a bounce from there, and if it's going to continue to head down, you don't get above this trend line here, and then you come down and test this line, and then you've got even a longer-term trend line with this brown one here. So I think we've got a chance to go down there. I think gold's going to get a rally. It looks to me like there's a lot of stuff that's coming up in September and October, and if gold becomes, I've always thought of gold as a barometer of anxiety.
Yeah, well,
So,
Burwell's answer to that question about inflation, deflation, John B. says, I lean to the deflationary side, but it's only a guess. Burwell says if the K-wave winter is still ahead, the result should be deflation.
No question. And you're probably going to get an initial deflation. These guys are major inflationists because they thought, you know, again, remember, the Federal Reserve was developed for those of us that are gullible enough to buy into it. It was there to, you know, take the twists and turns out of the economy and make it a smoother ride and so forth. But the reality is it's there to make a heck of a lot of money for a small group of people. But anyway.
Well, from Burwell, although Roosevelt outlawed the ownership of gold, the mining stocks, Homestake and Dome mines, rallied 400% by 1932. Should not gold rally in the K-wave winter?
You know, it should. It probably should. And yet when you look at, if you look at the gold stock index, it's just been a disaster. As a matter of fact, it's fallen so much. I'm talking about the GDX. It's fallen so much that I did this in one of my last newsletters. I think it's down to the equivalent of what if gold was $385 an ounce. It's that far down. So, but they should rally. Remember, we didn't have the kind of debt back then that we have now, and the amount of debt that can have, as a matter of fact, lots of differences with 1929. People will say, I get into the conversation with people and they say, well, do you think we're so much worse in 29? I said, you've got to be kidding. I said, they weren't worse. They were significantly better. We were a young nation with plenty of room to grow, and we probably had 50 industries that had multiple decades of growth in front of them, and they're called the Dow Jones Industrial Average now. I said, name me 2 industries now that have multiple decades of growth in front of them. I said, seriously. And you know, the guys, well, technology. I said, that's pretty broad, but yeah, technology always has it. I said, give me another one. He's fumbling around and goes, auto industry. I said, surely you jest. You're kidding, right? You know, so anyway, at that time you had multiple industries of growth. We were moving into our position of dominance. In other words, we weren't the reigning empire then. We were moving into that position, kind of like China is right now. Now we're moving out of it. So the dynamics are really, really different. And if the mentality of this country is allowed to continue the way it is, we're Argentina, and maybe Greece. I mean, it starts with education. It starts with our ability to think. It starts with us having an ability to discern good from evil. Our ability to do that at the moment is horrendous. We as a group can't even make the basic decision between good and evil. Our common sense, our logic, our ability to think right is gone. Mainly because I think there's certain parties out there that are trying to remove it and doing a darn good job, and unfortunately we've got a bunch of people that just kind of, have gone along with that kind of thinking. But that's part of the cycle, and if you look at the cycle of reigning empires when they're on the wane, that's what you see. And we're no different than any others. The decline and fall of the Roman Empire, and you look at the leaders that followed Caesar and think, what the heck happened? Well, we're looking at the same picture. Hopefully we can turn that around. I'm pulling for divine intervention myself. It's the only answer I see. I'm sure.
We need it.
Sure, I say that with 100% seriousness. It's literally I'm looking for answers, and I'm thinking, that's about as good as I can do.
Richard shares that he has 1033 as a potentially important price target for gold. He believes it's deflation, and he believes that we are due possibly for an inflation uptick for a bit. Now, Burwell throws in that for the silver folks, silver declined 75% in the same period. Gold stocks rallied 400%. I suspect it is because silver is an industrial metal and not a precious metal. What do you think?
Well, I think that's true. That's true. Now we've had, in this cycle, we're having an attack on industrial metals because China has been such a great consumer. So you've got a little bit, heretofore in prior cycles. Well, maybe the question wasn't, gee, is there enough gold out there or enough silver out there? Heck, we hadn't even had the technology to go and extract, all the gold and silver that we've extracted since then. Now, though, the technology is, as far as extraction goes, pretty incredible. And with a big consumer like China, all of a sudden you've got kind of different demands and so forth that come in there. But generally, yeah, I think that's true. There's certainly a difference. But now you've got, there's another great dynamic that's much different. If you've noticed, most of the reigning empires, going back to Great Britain, have been countries of, shall we say, modest size and modest population. So Great Britain, obviously, not great land mass and not great population compared to the rest of the world. Then the next leader was us. And we didn't have great population at that time. We did have some land mass. The next one was Japan. Again, finite. And, population, not that big a deal. Now in this cycle, not only do we have the next emerging leader being somebody other than us, you also have the next emerging leader being a nation of great population and great land mass. And then you look at the secondary leader, and it's India, and that's the second greatest population on the planet, and a pretty good land mass as well. And now you've got 1 and 2 together. So you've got a completely different dynamic in leadership. I mean, what's going to happen with countries that have that degree of population, not just one of them, but 2 of them, and you move 1% of the people 1 step up into middle class? Well, they're going to want motor scooters and telephones and, you know, everything else. And all of a sudden you're going to, and we've seen this, this has already started to some degree. But when these nations, you know, China should go through a depression. They should have a tougher depression than we have. And then after they have that cleaning out process and go through their winter, then they should emerge very strong and be the leader for decades until their people you know, are doing what our people are doing right now. So that's what should happen. But it's an interesting dynamic because now you're dealing with two nations of enormous population, and that's going to play out very differently. You're going to need some sort of a monumental change, and I find that interesting because looking at really long-term cycles and looking at some of these things even religiously and spiritually and what's coming up on those levels and the really massive cycles, we've got a lot of big cycles coming together here, and it would imply that some type of a quantum change is going to happen, and boy, I have no idea. I have no idea what, but one of the dynamics is in the third dimensional reality when you've got a huge population coming into leadership and not one but two, that's going to change things. All the dynamics change with that. I mean, and they change in a big way. And the resources and the availability of resources as we know it changes. So
now, here's a question that surprised me a little bit from John B. Please ask Garrett how much India will factor into the world's economy.
You know, I don't know, but I have a feeling that India is going to be a pretty meaningful player. I mean, maybe India will be like the United States. You know, with us, it's the United States in this last cycle, and Germany or Japan for the most part. You know, one of those two nations. I think it takes that role. I think India becomes, you know, the Japan or the Germany to us. Isn't it interesting, by the way, that you notice how your trade partners become the people you go to war with? I mean, I'm you know, remember World War II? You're looking at Germany and Japan. Right. You know, see, so you know, is there going to be some kind of a battle between India and China or somebody, or you know, it just throws. There's just a lot of stuff out there, and then of course if you're in the midst of some kind of quantum change, it can take all that old dynamic and change it. So I'm very open to, I think at this point, I'm open to the change part of it and being an observer more than anything else, because a lot of cycles are coming along, and I think it's important to stick with the tradition and with what you know. But if you study enough, you see these other changes. This is not this. We are in a cycle most similar to 1929, but there's lots of big differences there. And then when you look at it on a very big picture, there's some monumentally big differences there.
Well, so, as far as India goes, there is an incredible emerging middle class there. We make fun of the call centers in India and all the, you know, when we call whatever product we might buy here in America, from the office supply store to the hardware store, we're trying to put it together, make it work, get it to function, and we dial a number, and, you know, based on new computer technology, VoIP, Voice over Internet Protocol, we dial a local number and we're connected to Ted, who obviously was not born with the name Ted, but is doing a good job. Now, in the United States, working in a call center, well, many years ago, working in a call center was like the bottom of the food chain, working in a boiler room. and then it became a phone room, and then when MCI came along, there was some respectability brought to the industry. Then they became telemarketing centers. Now they've upgraded even further. Call centers actually in the United States have become a respectable industry. It's not all about just outbound calls asking, if they can come and clean your carpets or do pest control, but these call centers that employ tens upon thousands of people in the U.S., everything from banks to every other type of business imaginable. In India, I don't know if you've ever seen a shot of the skyline in some of the major cities in India, but you can't see the sky because they're still using the old telephone lines from days gone by. Here in America, we tend to have our telephone lines underground encased, but they're still hanging loose in India. And to get a job in a phone room or in a call center in India is a status symbol. There was a sitcom on TV. It was only on, I think, for one season, short-lived, but for someone who had been in the call center industry for most of their lives, such as I had prior to CFRN, it was very meaningful to me. And not only is it to get a job in one of these call centers in India, do you make a far above average wage than the average person living in India. Should you get promoted to supervisor or manager, I mean, that is a big, that's a big thing. It's huge. And it's reshaping that country. And the emerging middle class there it's enormous. And so I know the guy, I'll just call him Chuck. I'll leave out his last name, but his real first name is Chuck. Back in 97, when I first met him, he had just been awarded the contract by the country of India to provide wireless internet to the entire country. And I remember laughing at him. He owned a business at the time that sold long-distance services. This is back when MCI was still around. He had a company that sold long-distance services, sold phone cards, laid cable and fiber optic. But his real hedge was that he had secured this and I'm like, Chuck, do you understand how poor these people are? Do you understand, Chuck, that these people don't have computers? Chuck, I mean, we barely had cell phones here in America at that time. Usable, affordable cell phones. And but he had a vision and he had a belief, and his engineer became a very dear friend of mine, Don Jeffrey, God rest his soul. He was called home early. But Chuck, well, let's just say Chuck had a habit of doing well for himself, and Chuck did real well with his contract to provide wireless internet to the country of India. And so I haven't seen him and talked with him in a long time. I should invite him to have a conversation here on the show. You know, we are over time and running out of time, but let me scoot through here and see what other questions there might be that we can hit real quick. Sue says, why do you think India and China will go to war? Did you say that?
I don't necessarily. It's just I don't. It's probably more logical that India and Pakistan would go to war, but I don't think that. I just mentioned that frequently your trade partners are those that you go to war with when things go south, which is what happened, in World War II. And then when you emerge and come out into the new cycle, like with us at leadership now, the number 2 or 2 and 3 economies that have kind of been there with us for a while that have retained that position. I mean, obviously China's moving very quickly in that, but before China made its moves, it was Japan and Germany. So that's all. I'm not trying to draw any inference on that at all. It's just that our trade partners now, happen to be the people that we were at war with in World War II.
Right. Yeah. Now, Canoe, you're correct about the number of people in India who have cell phones. The leader in cell phone ownership stemmed from Kenya and then bled over into Uganda. When I made my very first trip to Africa, which was back in 2003, I was absolutely amazed at this country filled with homeless people. People who had either no home or they had a little plot of land with a mud hut that they lived in. They had a phone. It was the old style flip phone, but it could be used to text, and it cost about $8 to buy the phone at the time. You would buy minutes and put it on the phone, and then you would text your phone credits to buy and pay for goods and services. The same way we would use a credit card or write a check, they use their phones there as their form of banking for 2 reasons. Most of them in Kenya and in Uganda did not have proper identification to open a bank account, nor did they have the minimum balance required, or were they able to maintain the minimum balance required to have a true legitimate banking account. And so just now coming to America, this clever Apple iPay, where we swipe our phones and do these different things with our phones and pay for our goods and services, this has been going on in Africa since 2003. In fact, I wrote an article some years ago for the Motley Fool that talked about the incredible growth of this practice in Africa, the companies that were behind it, and the investment opportunities that were there for Americans who were looking for a speculative investment return, and boy, did they ever find it. Sue says that in India, the non-engineering graduate finds a call center job prestigious, but the engineering graduate doesn't join the call center job. No, they mostly just remain unemployed, unfortunately. I hired a team, Michael and I hired a team of 3 from India back, I think we go back almost 2 years now. We had a 3-man team, 2 ladies and a man. They worked 8 hours a day, 5 days a week. So we were paying for 120 man hours. And because there was such a difficult, the communication was so difficult, I let it go on. I let the contract run almost a year before I finally shut it down. I just didn't feel that we were getting what we were paying for. I didn't feel that we were getting 120 hours of work per week. And I think it goes back to there was a breakdown in communications, a failure to communicate properly. They were good people, and the work they did for us was good quality work. And if I specifically gave them a job and said, now this is exactly what I want done and exactly how I wanted it, it got done like that. The problem was that I needed someone on the team who would have some initiative and be able to do some forward thinking. And we parted on very good terms. I left them with good recommendations. It just didn't make sense because we were spending. I mean, by American standards, we weren't spending a huge. Let's just say you couldn't put 3 people on payroll for 40 hours a week for what we were paying. But The articles, a lot of the contracts and things I would have to rewrite because of the language barrier. Once that is overcome, my goodness, that alone is going to change. There's going to be such a huge shift in the world economy because there is a ready, willing, and able workforce out there. I don't know how familiar you are with this, but Garrett, you can hire virtual assistants in the Philippines, you can hire virtual assistants in India, and these are cracking smart people, man. I mean, they've graduated top of their class with honors, and if you can get beyond the language barrier, you can get some great work done. And it's not that you're, just, getting cheap labor. You get quality work for a fair price. In other words, they are able to be a part of the emerging middle class. They're earning what is considered, where they are, a good wage. I mean, it's a much desired job. I mean, the list of candidates that we had to sift through was mind-boggling. It was so difficult. Finally, our liaison here in the U.S., I said, pick me the best three. He got me an engineer, he got me a developer, and a virtual assistant. 3 people for the team. I asked him, I says, please, you pick the best qualified that you have available for me, because wading through all these resumes, I would literally have to hire a person to wade through the resumes. And so we are bringing another team on board. I don't know if we're going to go to India this time. I think we may go to the Philippines. Have you had any personal experience, Garrett, working with virtual assistants in other countries?
You mean like when you're calling in?
Hiring someone to do work for you?
No. Oh no. I've had a friend of mine has, though. And
how did that work out?
He found it cost effective, and I can't remember. I'm just trying to rummage through my thinking here and see what he had them do. But he utilized that, and I think what happens is, you say what you're looking for, and then it kind of goes up for bid, and
right. That's one of the methods, exactly.
Yeah, so you either pick and choose the bids you want or whatever. But what he was doing something pertaining to marketing for his company. And getting all those things going. Yeah, they do
great web development. They understand SEO like nobody's business. And if you're able to guide and direct them, if you can say, I'd like this done, as long as they understand what they did fine work. And so I take blame on myself. But again, because of the language barrier, I was not as an effective team leader as I should have been. And I really felt bad about terminating the relationship, because I knew that it meant, their ability to support their family. But I also know that there were people standing in line behind me waiting to hire as well. So, I had to do what was in the best interest of our company. How will going to Philippines help with the language barrier? I spent many years in the Philippines, Sue, and I found that English taught as a native language in most of the schools, I've had very little difficulty communicating in the Philippines. So that's the reason. I gave India a chance. Now I think I'm going to give the Philippines a chance.
Dwayne, I may need to...
Yeah, no. I know. You already shot me back the charts. Okay, I didn't even see that. Let me grab my screens real quick. Yeah, I know you need to run. And going forward now, we're going to keep this. We'll keep this on track. Okay, we'll go from on Monday. We'll be here from 1:30 to 2:30 Eastern, and we'll keep it on clock. All right.
So, well, thank you. That was, you have a group of people that ask a lot of great questions. So
They do. We got the greatest audience in the world. Now, I know we talk a lot about with you big cycles, 40-year cycles. Anything you want to share with the audience before we go today on the current condition S&P? I know you don't do a lot of short-term calls and that kind of thing.
No,
You're looking for higher prices, lower prices in the S&P?
Actually, my money management, money management situation is short-term, and sometimes very short-term.
Very beautiful.
And the reason, and I'll talk about that maybe one of these times in the future, because we do something completely different. But what we look for is for something to be extremely stretched out as defined by its own price history. So then when that happens, the name of the game is, most money managers or investors are buying something that they like. Generally, market timing isn't part of the equation. For those that it is, still doesn't necessarily make it more than a 50-50 probability of being correct in the short term. So we're looking for something that gives you substantially better than a 50-50 entry. But I'll talk to you about that.
Let's do that. Let's make that a point of time. Let's make that a point of discussion on next Monday. Okay.
It's different. Yeah, short term. It looks to me like the S&P's got a chance to go down this week. You know what happens when you get historically, you can just see them on the chart. When you get a big move either up or down, the history is this year, and even going into probably November of last year. This year alone, you've had 26 whipsaw moves. I wonder if a third of those have had any reason other than the fact that you get a triple-digit a triple-digit Dow Jones move, and then shortly in a day or two you get one in the other direction. This is going to be very interesting tomorrow. I mean, I think if tomorrow can follow through with some selling, we're at the point where you could actually pick up some momentum to the downside here. I don't know whether that's going to happen or not, but we're certainly in the position for that to happen. My turn date and some of the work that I do actually was tomorrow. I don't think that's necessarily going to be a turn up. I was thinking that this might get some follow through on the downside, but I've learned not to assume too often. But this could follow through. It wouldn't surprise me, and we're due for this type of a move, for this to follow through and get some decent selling maybe this week. And the real question is going to be, I mean, there's 2 points on the cash S&P that I think are critical. One is the low from July 27th, which was 2063.5, and that's down there a ways. We got to see how oversold we get if and when we get there. And then the channel line. I mean, there's a very prominent channel line that comes off the low of March 11th through the lows that we saw on July 7th and July 8th. And that takes you down to, well, it's a slightly upward trending line, but let's call it the 2045 area, somewhere in there, maybe even a little lower than that. So if we were to get down there, those would be real key areas, and it's just a matter of seeing how oversold we are if we get down to those 2 points. But for the first time in a long time, with this thing actually rolling over here and actually holding the decline, I mean, we've got to see if it holds the decline into the end of the day, because you know how that works. Every now and then they engineer a rally right out of the middle of nowhere, and so forth. But this is going to be interesting. I think tomorrow is a very key day.
Well, let's see. We put in a high on the S&P Friday, 2109, and so we're down 29 S&P points from Friday's high, which was put in at 9 a.m. Eastern. And so for there's a couple people listening to me that's somehow meaningful to. We're not going to talk about it, but it's a bit of an inside joke. Maybe someday I'll let you in on it. But listen, Garrett, thank you so much for being with us. I would love to go through each of the markets and see what your thoughts are in regards to gold and to crude. And can we do that next time? Can we walk through the markets? And just since you do some short-term work, can you give us, because a lot of our audience, we have audience that are interested in longer terms, waves, cycles. But we also have a very vast audience of short-term traders. Can we talk about some short-term stuff next Monday?
Sure. Yeah. Our stuff is done by an actual signal. So stuff will come up. We watch about 1,000 of the most liquid stocks and ETFs and indexes, and have no idea.
ETFs are something we don't do, so anything you can talk to us about on ETFs, that would be great. We deal specifically with futures, so if you can talk some ETF, we'd love that. We get goosebumps, all right?
Yeah, what happens with us is it's kind of interesting because, like I say, it's all based on the individual price history of whatever those 1,000 most liquid vehicles are, and then when they get really stretched out, that's when we'll get a blinker. A blinker is what we call a signal, and then it's a matter of taking a look at it there. And then the next thing is, the neat thing about it is, cutting losses and letting profits run is not what we're looking to do. How many profits have had a chance to run in this market? You let them run and they're not there anymore. So our deal is harvesting. So it's kind of an interesting thing. But sure, we can look at any of those markets. Let me know some of the markets you want to look at, and then I'll try and prepare some charts for those before we go on, or I can.
Yeah, we'll be in touch. We'll be in touch this week. This weekend, I was just so slammed with the release of our new managed futures product and some other things we got going on. So I will get together with you off air at your convenience. We'll have some phone conversations. We're going to get you on the team page. We're going to get your photo up, your bio up, and everything will fall into place. I'm just so thankful you took me up on the offer, and we're so glad to have you as a part of the family going forward.
Well, I'm honored to be part of it.
Have a great afternoon. I'll see you next Monday.
Thanks so much.
I'll talk to you before. All right, bye-bye.
Bye-bye.
Okay, guys, here we are dropping below the 2084/2085, and let me mute his mic just in case he forgets to. Okay, here we go. Now, let me see what questions you guys have left. We talked a lot today about the managed futures. We're not gonna hammer on that every day. It's going to be available for those of you that came to the show late. I'm gonna put it up for you one more time so you can go there and get started on your journey. Oh, we didn't have a chance to look at this. Let's look at this real quick. Lowest levels on record. What was this? Somebody sent me this link, and I don't know. What was it? What was it you were sending me? You said it had something to do with President Carter. Texas Attorney General turns himself in on fraud charges. Okay. German Mentis. Can you please give me a direct link to the particular article that you wanted me to look at? Please. Okay. The website is managed emifuturesservice.com. Now, this is very important. Okay, so please take a look at the screen. I have to go in and change the toll-free number. Okay. Somehow there was a typo on the website. Now, watch my screen. Write it down. 800-453-4474. Okay. One of the digits in the toll-free number. So my web guy, I don't know if he's available. If he's not, I'll pop in there and change it myself. The correct toll-free number to speak with Tim. Okay, Tim's going to be your account manager. Tim will not be your trader, okay? Now let me explain to you something about how managed futures work. You're not going to talk to your trader. You'll talk to Tim. Tim will be your account manager. Traders who have learned to trade have to be isolated from the client who calls every 2 hours. Hey, how we doing? Heard the S&P's up today. How much money did we make? What? S&P was up 20 points and we didn't make any money? What? We lost money? See, a trader cannot work under that kind of stress and pressure. So there has to be a buffer, all right? When you put a professional money manager to work, when you put a hedge fund to work, what you're paying for is the expertise of that individual to place trades on your behalf. What you're not paying for is the right to harp on him or her and tell them how to do their job. Okay? Now, let me explain something to you. Those of you that are on the training side of this equation with CFRN, those of you who are learning to be consistently profitable in the simulator, you're putting together 10 days in a row where you make $100 in 10 trades or less. Okay? When you complete those 10 days, you're already doing what 90% of traders on Wall Street can't do. Okay? By the time you graduate as a 20 contract trader, you don't understand the power that you have. But with your skill set and your discipline, the knowledge and tools that have been placed at your disposal. Does this mean you're superhuman, that you can leap tall buildings in a single bound, that bullets bounce off your chest? No, it doesn't mean any of that. What it does mean is that you know how to turn 2 points a day in the S&P into $2,000 gross. It means that you know how to turn 1 point in the Russell into $2,000 gross. It's before commissions. And let that sink in a little bit, okay? You are a rainmaker. Outside of the markets, okay? Well, there's only one who can truly turn nothing into something, and we all know that's God. God has the ability to turn nothing into something. That's how he created the heavens and the earth. He spoke them into existence, correct? That's what he did. Now, a trader, a professional trader, is a very unique individual. Every day, he starts the scoreboards at 0. Except if you're trading the 24/20 blueprint, your scoreboard is not set back to 0 every day, because you have carryover trades and you have carryover percentages. long before you hit the 20 contract mark. At the 10 contract mark, you need to be very, very careful who you talk to about what you're able to do on a consistent basis. Because you'll never, should you ever decide to trade other people's money, and I'm not recommending that you do. I am not recommending it. But once you hit the 10 contract mark, and that is you earn your way up, okay? One contract at a time, just like the blueprint shows you. At $2,000, you get to add a second contract. After a period of weeks, you get to add a third contract. By the time you get to that 10 contract level, anyone who knows you, who has any money put away anywhere, will literally be throwing money at you, begging you, pleading with you to trade that money for them. I mean, let's take a look at some real simple math, okay? What does it cost to trade one S&P 500 contract intraday? $500, right? The YM, the Dow, what does it cost to trade one contract intraday? $500 in margin. That's the margin required to place the trade. Now, depending upon your account size, you can set as large a stop as you want on that trade. But the margin you have to put up to take the trade is $500. Let's go take a look at the Dow, okay, for today. The alert said to be short 17,540. Right here, the market hit 17,440. Howard, I'm still on the radio, brother, so it's kind of hard for me to take this chat right now, but I'll try. Let's see. Oh, I can see. Can you call Bert, please, and he will help you? Question mark. Should have said that in Spanish, this thing. Can you call Bert, please? I'm still on the radio. Okay. Back to where we were. Okay, from 17,540 to 17,440. I know this is all very elementary for some of you, but for some of you it's not. Some of you are relatively new. Okay, that's a 100-point drop in the Dow. The Dow pays $5 per point. This move, if you're in the entire move, paid $500 per contract. Okay. Now, if you have to put up $500 to make this trade, and the trade produces a $500 profit, what sort of a return is that? Anybody want to throw out a guess? Anybody? Now, the S&P, as an example, it also costs you $500 to trade one contract. Our daily goal is $100 per contract, right? 2 points. And so if you make 2 points in the S&P per contract, that's a 20% return on your investment, is it not? So on a move here, that's 100% return on your investment. It's a daily return of 100%. Will you make 100% daily trading the Dow? No, no. I'm just showing you what happened today. I can go back and show you what happened Friday. I can show you what happened last Thursday. I can show you what happened 2.5 years ago on this day and time. Okay? Trades were there. The results were there. What I want you to understand is if you choose to allow someone to trade your account, build up your cash reserves, don't let that sway you from learning how to trade yourself, okay? Because that skill set will follow you all the days of your life. Once you have the knowledge, once you understand the methodology, once you own the tools, right? That's 100%. Now, well, what about the guy? What about the guy that's trading 10 contracts? Can you actually trade 10 contracts in the Dow? Overnight, it's pretty thin, right? But as we come into the Wall Street Open, the first hour, we traded 20,000 contracts. 22,000 contracts. 10,000 contracts. And in this hour here, where we went from target or from entry down $100, 100 points, there was 14,000 contracts traded. Could you slip 10 in there? Could you slip 20 inside of those 14,000 contracts? Yeah. So, well then, why would a person fool around learning how to get consistently profitable and then going live with one and then adding another one? I mean, if you have the money, why not just go trade 10? Because that's how people lose all their money. That's how people end up in the 90% line. That's how people become convinced the market is rigged and that the market is out to get them and that their office is bugged. That's how. That's why. Okay? So what you have available now is truly the best of both worlds. An opportunity based upon your account size to have a professional trader trade on your behalf while you yourself are learning to become that professional trader. So if you could trade 10 contracts, that becomes $5,000. If you've graduated to the 20 contract level, what does that become? 10 grand? It does. You know, the Russell here, trigger was 33. I know we got all confused with the math, but if we just went down to This is what if we just went from 33 to 23. And nobody gets out at the exact top or bottom. Nobody. Okay? So that last example on the Dow, nobody gets, except magicians. Okay? Now see, this traded through, all right? And now we've given some back. And so what the market put on the table and what you took advantage of, that's between you and the market. Okay? Now the Russell from 1233 down to 1223, that's 10 points. The Russell pays $100 per point. The S&P pays 50 a point. Russell pays 100 a point. So for a one contract trader, that was a $1,000 move. One contract. How much does it cost to trade the Russell? $500. So the Russell today, based off last night's Concierge Trade Alert, was 200% return on investment. Put up $500 to take the trade. And remember, we're not counting the bottom here because there's too much math involved. We're just going from 33 to 23. Because remember, only magicians get out at the exact top and the exact bottom, not traders. Okay? I don't have that skill set. I don't know anyone that does, honestly. So be very careful of that, all right? Will you be able to make 200% return on your money every day? No. Will there be days that you actually lose money? Probably. That's the truth about trading. You know, the one we never really pinned down was gold. Whatever happened with gold? Let's see. The alert on gold last night said... take a peek. Sunday night, gold. December gold. Said to be short below 1090. Where's 1090? See? So you trigger and there's a drawdown. Do you stay with this trade or not? How far did it drop on this first move down? 14 ticks. Would that be enough to give you your goal for the day? Would it? You only need 10. Okay. This was the long trade on Friday, the short trade last night. So we looked at bonds, we looked at the Russell. Let's see, the Euro do anything today? Not much. Huge day on Friday. The ES, we looked at the ES. The ES, it did finally trigger. And our trigger was 83, and we dropped down to 2080. And so there was 3 points available on the S&P, but if you got your 2, that was your daily goal. Okay. So one more time, managedfuturesservice.com. All right. Where'd it go? Where'd it go? Tim's number, 800-453-4474. Let me make sure I got it right this time. I had it right the first time, but somehow it got transliterated. 800-453-4474. That's the number you need to be calling. All right. I'll get that fixed on the website here. Lickety split. Either my web gal will do it or I'll do it. Let me just see if there's any final question. Okay. Does everybody understand the numbers? Do you understand the power of that? Do you understand people throwing money at you? Does any of that make sense? Okay. Hopefully it does. All right. I'm going to run. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Now listen, I ain't crying tonight, so if you came for that, you're going to be disappointed. In fact, I'm preaching angry tonight to make up for last week, all right? So open your Bible to Hosea, and no, I'm kidding. Grab it and go to Hebrews chapter 3, and that's where we're going to be. Hebrews chapter